So friends, a very warm welcome. A lot of you are joining us today as a fresh batch. So let me just take 10 minutes to give you a little overview. For existing participants, it could be a bit of repetition, but I think it's important for new joinees. So let me just take 10 minutes to give you a little overview on how this program is going to flow for you. If there are any questions, I can address that, and then we dive into our session number 1. Friends, my name is Rahul. I'm one of the directors of the organization. I'm joined in this session with Preetu. Preetu is going to be the lead trainer for this program. So I will be doing the session today along with her, and a large part of this program will be taken ahead by Preetu as we go along. Okay. As you know, you have signed up for HR Generalist program. So this program consists of 3 modules. So you are starting with your first module today, which is payroll. Then you will get into talent acquisition once this is done, and then SHRM, and that is how your program will get completed. Some of the participants who may find in the batch, because at start of every module, there are new participants who come in, because these 3 modules are independent modules. So whichever module you join in, you finish at the same module after 3 months. So it's like a round robin, right? So you will have some participants for whom this could be the first module, as many of you joined today, or some participant, it could be their second module. And for some, it could be their third module. Okay. And some would have given the exam today whose third module is already completed. And that's how you get to interact with a lot of your fellow batchmates. All the sessions that we are going to conduct are going to be live. So please don't miss any sessions as much as possible. And stay as focused as you can in the program, because that is going to be very helpful. All these sessions are live and recorded. So don't worry about taking too many notes. Okay, take the notes that are relevant for you, that are important for you, because all the presentation and notes that are being shared in the class are also given to you on the drive. So once the class gets over, today I will share a Google Drive link with you in the evening. And all that we are discussing in the class, the presentation will be uploaded onto the drive. Even the class recording will be uploaded on the same drive. However, the class recording may take up to 12 hours to get uploaded. Okay, so please be patient with that. So up to 12 hours, it can take sometimes to the recording to come to you, but it will come to you on a drive. All the content that is being shared with you can be downloaded, so you can keep it for the rest of your life, except class recordings. The class recording is available to you up till few months after the program is over, but it cannot be downloaded. You can come and view it as much as you can. As a standard practice, the recordings are with you till the end of your certification, but generally we extend 1 or 2 months, beyond that, so that sometimes the doubt may come and you may have to refer to it again. So friends, your learning is extremely important to us. So you have a full right to be selfish with your own learning. So if there is something that you are not understanding, please let us know. Although there will be various trainers that will come and train you throughout this program, and all are highly experienced and have great expertise in the topic that they're teaching you. However, they all come with one weakness, which is they can't read your mind. So if you are not understanding anything, there is no way for a trainer to know that you're not getting it. So you have to let us know in the right time. Otherwise, you may be left behind in this program. Okay. And at the end of every module, you write your assessments. And once all 3 modules are completed, you get certified. So let me just pause here and see if you have any questions this time. Okay. Some of you may also have, so as you know that this program comes with a lifetime placement support. So some of you may be interested in switching your jobs or looking for jobs if you're a fresher and stuff like that. So you can get in touch with our placement team. You can write to them at placements@protouch.services, or you can ask your advisors to make you connect with them. All the openings that are available are shared with you on an email. So please ensure that your registered email ID with us is correct, so that you don't miss out on any opportunity. And if you are interested in any of those opportunities, you can apply, and the placement team will take it forward with the prospective employer. Yeah, so I think that is what I have to share. Keep your videos on, be interactive, ask questions, learn from each other, learn from your fellow colleagues. And this message especially for freshers. How many freshers in the gang here? All the people who have joined new, how many freshers? Just write F in the chat box, or just raise hand. Thanks, Neha, you're a fresher. Thanks for letting us know. Asa is a fresher, all right. All right, so there are quite a few freshers. So sometimes what I have observed is, especially with freshers, they get little excited in the first 1 or 2 sessions, because a lot of experienced people, because it's a collective group. So there are freshers and there are experienced people. And sometimes they get worried about, yaar, mere ko to aa nahi raha, ye kya ho raha hai, and all that. People are asking so many questions. Don't worry, you have paid for the program. You have a great opportunity to learn from, over 30, 40 HR professionals that are with you, and there are a lot of freshers. So take this opportunity to network, understand from each other, learn from each other, and wherever you have questions, please ask. Okay, it really does not matter whether someone know that answer or someone does not know that answer. You be participative, and you get your clarifications. One thing is for sure, don't worry about you being ridiculed or are you wasting time. We will, in every session, and Preetha is very, very patient. In every session, we will stay back till the time we have answered all queries. Okay? Don't worry about it. So keep asking your queries. Sometimes the session may get extended a little bit, but I think that's all right. Your learning journey is more important than the timing. So make good use of it. Only one request: keep the questions relevant and sharp. I think it helps. It helps the team to stay focused. If at all, a trainer may feel that this question is little out of context, and we should address it towards the end of the program, so the trainer will let you know. So please don't feel offended, because it's the interest of the pace of the class. Yeah. But if it is relevant, we will stop and address it right there. All right. Any questions? Else we dive into the program. All right, are we good to go? Shall we start? Just give me a thumbs up on your screens. If you're all okay, great. And keep your videos on as much as possible. It gives a good connect with the with the trainer. All right. Superb. So let's start. So as this is the first session on payroll module, and people who have done the other modules, this module is a little different. Okay, it may challenge some of you in terms of your capability to cope up, and it also is a slightly more tougher module than other modules, because of laws being involved, statutory compliances being involved, some numbers, some calculations. So, it's very important that you practice at the end of every session. So before we begin, Pritu, you have anything to add before we go ahead? Anything that I may have missed out?
No, Rahul, you have covered most of it.
All right. So please feel free to, wherever you think it's important.
Sure.
All right. So, friends, you all are HR professionals. Let me ask you a very simple question. What is a role of HR in any organization? And I want it in 1 or 2 lines, not more than that. What's the role of HR in any organization?
Yeah, good afternoon, sir.
Good afternoon.
Hello. Yeah, according to me, HR is a bridge between an employee and an employer.
Very good. I think that's a good explanation. It's HR is a bridge between employee and employer. All right. Anyone else want to give it a try? In your own language, what is the role of HR?
A person who acquires the people according to the specialization that is needed in the organization and check the performances.
Right.
Good
Anmita,
afternoon.
Antima is saying attract, retain, and motivate. That's a good explanation.
Good afternoon, sir.
Good afternoon.
Vartika this side. So according to me, HR person is the one who builds a respect between the employer and the employee, and team connects, make build up a trust and respect between the employee and the employer.
Very good. Thanks for sharing. Yes, Kundali.
Sir, how can I ensure that the human resources in the organization is productive so the organization make profit?
Beautiful example. Very nicely said. And this is one piece a lot of HRs miss out. You all heard what she said. I think the way I define it, and it's not a book definition, it's my own definition, which is my experience of so many years. Role of HR is to plan the resources that organization need, plan human resources that organization need. Then basis that planning, go ahead and attract that talent for the organization. And once talent is attracted, ensure that they are retained. And more importantly, what Kundali said, to ensure they are productive. Any organization make profit if the resources are productive. And resources could be human resources, it could be money, it could be material, it could be machinery, it could be technology. Organization could be having any resource. Organization make profit if all the resources are productive. And HR's responsibility is to ensure that human resource is productive for the organization. And everything that we are doing in HR is either to plan, attract, retain, or to make human resource productive. Right? And during these 90 hours of program, you will see many elements of human resources, but eventually they all are targeting to these 4 things. How do you plan? How do you attract? How do you retain? And how do you make them productive? Andima, you're saying motivate. That's right. But the reason we motivate our employees is we want to ensure that they are retained and they are productive. Otherwise, that motivation has no relevance. You can have highly motivated people who are not productive. Organization will not make profits. Organization only make profit if they are productive. And this is one big gap most of the CEOs find in their HR professionals. One second. Okay. Now, this module where we are going to talk about payroll, what do you understand about payroll? Payroll and statutory compliances. And why it is important to learn.
It is the amount of compensation that we need to give to the employees, and it is important to learn because we will know what at what position and for which work we should pay, how much amount should be paid.
Good point. Thanks for sharing.
It's only because of the money that we get, we are working.
Absolutely. Good point. Bang on. because it's a commercial relationship. You know, people work for money and people are hired to generate money. You know, it's a commercial relationship. And a person who has an understanding, a good, yes, Kundali, you have a point to make. Sorry, you raise your hand.
No, sir, I didn't raise my hand.
Okay, sorry. All right. So what and a person who has a good understanding of payroll and statutory compliances. Someone said that HR acts as a bridge between employer and employee. Okay. When it comes to money, you know, what is the expectation of employee? What is employee's expectation?
For a good package in monetary terms. Hello.
1 second. Yes,
Sir,
go ahead.
every employer's expectations. Yeah.
Yes, go ahead. Go ahead, please. I can't hear you properly.
Yes, sir. Every employer's intention is only one thing: paying money as per their work, as per work.
Yeah. So what is the employee's expectation when it comes to salary or when it comes to money?
Sir, I think payroll and statutory compliances are required because in monetary terms, the interest of employees and employers should not be compromised. So there has to be some set of standard rules to safeguard that practice.
Well, that's true. You know, you're right, Neha. My question is, when you work for any organization and when it comes to salary, when it comes to money, what is your expectation?
The more, the better.
Absolutely. Who said it?
Amrita.
Amrita, absolutely. You're bang on all these points. You know, it's very simple. What is the expectation of employee? And whenever in payroll we say employee, we always denote it as EE. Always remember, employees in the payroll language is denoted by EE, and employer is denoted as ER. That's a payroll language. Okay. So and as HR, you should be aware of it. So what's the employee's expectation?
So any full form of EE and ER?
No, they're denoted. So employee is denoted as EE and employer is denoted as ER. Employer, that's for employer ER, and for employee EE. That's how it's the first and the last alphabet, basically. Okay. So either more take home or more savings. That's what employee is looking for. What is employer looking for when it comes to salaries?
A budget is followed, like with minimum budget gets the good resource.
And good return.
Yeah, one is good return, but when it comes to money, what is the expectation?
The lesser, the better.
Absolutely. Lesser the better. You know, their expectation is low CTC. So they are not too bothered about what the salary is. What the employer is bothered about is what the cost to the company is, and we'll talk about that. Okay. Before that, this is a message to all the freshers who are joining in new. After today's session, when I will give you a upload on, because many of you could be from a non-HR background. Okay. So after today's session, I will also share one video on the drive, which will give you a good understanding about the role of HR. Okay, so that we have the right context. Because otherwise, sometimes you may feel we are still, diving into payroll, and I don't really understand what HR is. So you can go through that video at the end of the session. It's about 45 odd minute discussion on one of the previous batches. So you can go through it. You will get a good understanding of what's the role of HR. Yeah. Okay. So friends, employee always want more take home, more savings, more money. Employer wants better people at a lesser salary. Okay, lesser and more than lesser salary, they're more interested in what is the lesser cost. because everything that they incur on every employee, it could be salary, infrastructure, the real estate, compliances, or are there any benefits or perks? So that all put together is a cost to any organization. And hence, what is the role of HR? Role of HR is to balance out the expectation of the two key stakeholders of HR, that is employee and employer. Is it clear?
Yeah.
And a HR person with a good understanding of payroll and statutory compliances can do a great job in balancing these two. You can increase take home, reduce cost to the company at the same time if you have a good understanding of how payrolls can be created, how salary structures can be created, and we will talk about that more in detail as we go along. Are you okay with till now? Is it clear to everyone?
Yes.
So, friends, what is salary? What is salary?
Remuneration after work.
Remuneration. I did not get the full statement. Remuneration after?
After the work that has been given.
Right, right. Anyone else? Good, Amrita.
The amount of money you are getting as per the delivery of job or maybe your job profile.
Very good. Very good. So salary, friends, is
Paying.
Yes, Atuluri?
Yes, sir. Paying for about skills.
Playing for our skills. Absolutely. Yeah. Nidhi is saying fixed regular payments in the chat. So all of you are right. So salary is what an employer agreed to pay to employee in exchange of its employment. Okay. Salary is a payment, or salary is an amount that an employer promised to pay to employee in exchange of its employment or work. Is it clear? Now, how it is different
Yes,
from
sir.
pay? We say payroll, we have to run payroll. So how it is different from payroll? Why don't we call it salary roll then? Are they same? Are they different?
It's different because payroll has got the benefit as well within it. Salary is tangible. In payroll, we also consider the intangible things that are included, like different kinds of rewards and benefits, fringe benefits, everything.
Okay.
Incentive, probably trips, or maybe other small things which are actually ESOPs. These are also involved.
Okay. So let me tell you a fundamental difference, friends, between salary and pay. Salary is what an employer has agreed to pay to employee in exchange of employment, which is a promise made against a work done or the employment, in this case. Pay is something which is an English word called pay, is actually what an employer is actually paying every month to its employee is called pay. So salary is an agreement, what you write in offer, that I agree to pay you this amount. Suppose I agree to pay you a salary of 50,000 every month, so that becomes a salary. But what I'm actually paying at the end of every month is called as payroll. And that's the reason it is also called as pay slip, because that is what is finally getting paid out. It could be more, it could be less, that we will see in this journey of next 1 month during this course. But have you understood the fundamental difference? What has been promised to pay in the contract or in the offer letter is salary, and what is actually getting paid out is pay.
Can we say that it is a cost to the company?
Sorry?
Can we say that it's a cost to the company?
CTC.
CTC.
No, the CTC is cost to company, but CTC is very different than salary and pay. So
Okay.
these three are independent words. Okay. And we will study all of that, what is salary, what is pay, what is CTC as we go along. But just for now, just remember that salary is what gets agreed either at the time of joining or at the time of appraisals. When you get a raise, then your salary get revised, which means what I am promising to pay you is getting revised. 1 second, please. So salary is what is promised, pay is what is actually getting paid, and CTC is something very different, which is actual cost that a company is incurring, that we will see in session number 6, not right now. Okay.
Sir, I have a question. I have a doubt.
Yes, Amrita, go ahead.
Sir, if the salary is an agreement or a promise, and pay is what is actually getting paid, so how what is the difference? Like when salary, when an employer is promising that I'll give you 50,000, can it be like it is not paying 50,000? Then it will be breach of contract.
No, not really. It is as defined under the rules of contract. Say, for example, I'm just giving some broader example, and we will get into all these details in session number 6 and 7, not right now. But I'm just giving you some top level insights. Say, for example, some employee is on leave without pay for 15 days. So that much amount he needs to get deducted. Employee have earned incentives, so that amount has to get added. Employee has got some benefits that need to get added, or some, employee has taken some advance that need to get deducted, or there are certain statutory compliances. Employee has to pay PF contribution from its salary, so that needs to be deducted. Taxes has to be deducted. So within the rules of the law, this can go up or come down. Employee has taken some overtime remuneration that need to get paid, some leave encashment. So there are so many things that will go along while you calculate the payroll, okay, which gets either added or subtracted from the salary. Does this answer your question? Yeah. All right. So for the first 5-6 sessions, we will focus on salary. Okay. Once we are sure on salary, then only we go to payroll, and will not complicate things till then. Okay. Great. So whenever you make any offer, and most of you may find it difficult in the beginning to wear a HR hat. We all start wearing the employee hat first and then the HR hat. And we start looking at this course as an employee and not as HR. Okay. It is good to learn this course as an employee, but what is real value is how do you learn this course as HR? Okay. Because we start getting worried about my salary slip, my offer letter, what is written, what is not written, and things like that, and see more from the HR point of view. One of the most favorite questions that I get is, my employer is deducting my PF from my salary, and we'll talk all about that. So whenever you make offer, employer generally break down the salary, and we will start with that first. Okay. How an employer break down the salary? Suppose an employer say, I am going to give you 50,000 monthly salary, and this salary is broken into various components. Now let us look at what are some of the components. Anyone want to start? What are some of the components of any salary?
Basic.
HRA,
HRA.
Basic, HRA,
Special allowance.
education, and
education. That's right. Very good. No, that's the easy part of it. Let's look at slightly difficult part of it. Why you need to break down a salary? Why employer need to break down a salary? Can an employer say everything is basic and finish it off?
Fixed and variable, they have given the two broad differentiation, so that the variable depends on whether I'm taking that or not, and fixed is that which I will have every month.
Good point. So as far as statutory compliances is concerned, they don't understand what is variable pay. Okay.
Actually, sir, increment is put on the basic salary.
So yeah, I'll come to that. So good point. May I just stay with your thought? So you're right. So many organizations have a structure, and that's a start point structure that Amrita is saying. There is something called as fixed pay, and there is something called as variable pay. Now, what compliances is bothered about is only this. Because variable pay is actually not a promise. Okay. It is subject to various conditions, and that's the reason it is called as variable pay, and the total is called as total pay. And on total pay, we have to add few things to get CTC, but it's okay. So what is fixed pay and what is variable pay, friends? Fixed pay is something that will come out every month. Okay. And it is not performance dependent. Fixed pay is not performance dependent, and it has to be paid in exchange of the employment. If the employee is working, then that money has to be paid out, and that is called as fixed pay. Okay. In the traditional language, this is actually the salary, fixed pay. Now, variable pay has started getting added as a marketing gimmick to inflate the total pay or to bring in the pay for performance elements. Okay. Now, we'll not talk about variable pay right now. We will just stay with fixed pay, which is a salary that an employer has promised to pay to employee every month. Now, you said that this is broken into various components, right? Like basic, HRA, allowances, and other stuff. Why there is a need to break down a salary? Is it mandatory to break down a salary?
Sir, just have a thought. Is there any chance of tax? Tax is an issue.
Good point. So there are a lot of tax benefits that is provided by Income Tax Department of India to salaried employees. There are a lot of tax benefits that are available to salaried employees. And there are certain conditions under which those benefits are given. Now, in order to avail those benefits, employer need to break down the salary of employee into various components. So the whole objective is to save tax for the employee. What will happen if they save tax for employee?
The take home increases.
Take home will increase, absolutely. And if you remember my first chart where I said the HR has a responsibility to balance out two things. Two stakeholders, employees and employers. Employees interested in higher take home salary. And what employer is interested in? Lower cost, correct?
Lower cost.
Now, a smart designing of a salary structure can address both these issues together, which is increased take home for the employee and reduce cost for the employer, if it is properly designed. And that is the reason employer has to break down the salary. Now, is it mandatory that the employer should break down the salary? So there is no law that forces an employer to break down the salary. Employer can put everything as basic, no problem. There is no law that you have to break down salaries. Now, employer break down salary in interest of both employee and employer. Is it clear till here? Any questions till here before we get into the breakdown?
Yes, sir.
I'll just wait for a few seconds. If just assimilate what you have learned. Is there any questions still here? Just raise hand.
Sir,
Yes, please.
yeah, as of you said, a breakdown is between employer and employee is not a compulsory, right?
Not a compulsory. It is.
Then you can directly credit it as a basic pay.
Yes, you can. You can.
Okay.
Employer
but
can.
Because we are.
Okay.
But
So
we
good
are
point he's
seeing,
raising.
yes,
So they actually do the breakdown to avoid the tax benefit, right?
Yes. Yes.
Else that part, anything else? Anything other reasons why they
No,
break?
no, there is no other reason. The reason of breaking down is purely commercial in nature. That how can we benefit both employee and employer through a smart designing of salary structure, because a lot of income tax benefits are dependent on how the structure of the salary is. And we will learn that, we learn everything in this program. Yes,
I have a question, sir.
Yes, Sahili, I'll just come to you. Satulari, you had a point. Just complete your thought.
Yes, yes. Actually, what I thought means breakdown is according to the companies, they have to provide some of the facilities to the employees who are working in organization. According to my thought that the breakdown should be shown as providing some facilities like education allowances, what are traveling allowances, whatever for the sake of an employee. So maybe according to my thought is that the company, I think in the Companies Act is that shown like that. I had forget for the Companies Act that it was written like so. That's why I thought that a breakdown has been happened.
No, there is no law which says that you have to break down the salary. You can give the entire salary as basic salary, no one can challenge. And the breaking down the salary is purely employer's discretion. It is not employer's discretion, it is employer's discretion how the salary is to be bifurcated, in the salary. Yes, Anisha, I'll just come back to you. There was a question which was raised by Sahili. Sahili, go ahead.
Yeah, so I just wanted to understand, so what are the components come under fixed pay? And is this fixed pay components vary from company to company? Like there can be addition or there cannot be something, as you said, you don't have to break down. So then
yes,
how?
so I'll address that. So I told you that so there is no law. Employer can choose to break down the gross salary the way they want. And that is the reason every organization can have a different breakdown of salary.
Okay.
Okay.
And
so,
what are the components? We'll study that.
Sir, one question.
1 second, I'll just come to you. Just raise hand on your screen. I'll come back to you. Sahil, does this answer your question?
Yeah, so I just wanted to understand, like, what are the components will
Yes,
come?
we will cover that. Just
Okay,
stay for
okay,
some time.
sure,
We will
sure,
discuss
sure.
that. Yes, Anisha.
Sir, so breaking down the salary is beneficial for the employee. So how does it benefit the employer as well?
It does. So I'll explain you. So that's what you will learn in this program, how it benefit both employee and employer. Okay, and some part of it you will learn today itself. Okay, and every session you will learn how it benefit both. Yes, Amrita.
The same point. I wanted to ask that the same thing.
Yes. And if and hypothetically, suppose if it does not benefit employer, okay, and if benefit employees, it indirectly benefit employers, because no matter what you have written salary in the offer letter, the employee is going to ask you one question, that is, milega kitna? What is the money I'm going to get eventually? Tell me that. Okay. And that is what every employee is interested in. And if through a smart, say, suppose your gross salary is 50,000, and I can give you all 50,000, and through which you will get a, I'm just giving an example, take home of say 40,000. But if through smart designing of my salary, if you can get 45,000, do you have a better chance to attract that employee?
Yes.
Yeah. So it benefits the employer, but it financially also benefits the employer, that we will learn in the program. Because no matter what you're saying, employee, you can write 10 lakh, you can write 20 lakh, eventually employee is going to ask, har mahine kitna paisa mere bank pe aayega, wo batao. That is what the employee is interested in. Some people will say directly, like Amrita, and some people will calculate and keep it for themselves and make a decision. So as a good HR, it is your responsibility to have that discussion. Because and that's the reality, isn't it? We all are working for our, how much money we're going to get in bank. You can write whatever on the salary offer, no problem. What I'm getting is more important. Great. So shall we move ahead, friends? All right. Now let's look at the breakdown. Yes, Saurabh, you have a point to make?
Sir, that I was talking about the components. Means like components are of two types only, no, fixed and variable pay.
No, now we are only on fixed pay right now. And
Okay,
within fixed
so
pay, how do you break down? We are going to talk about it.
okay.
Now,
The salary part in
sorry?
the salary part, the salary we are talking about is only the fixed pay.
That's right.
The fixed
That's
pay part we are talking about, right?
Absolutely,
Okay,
absolutely, absolutely. See, variable pay is nothing but another word for incentive. You know, it is just nothing but a synonym for incentive, which is variable pay. Depending on how you perform, I'll pay you more, which is nothing but incentive. So this discussion, we will keep it to fixed pay. Okay, friends, one more important question. So because this can be a little technical in nature, and if any one of you here is not fully comfortable in English, although the delivery of the session is in English, but if you want to ask a question in any other language, please do so. I'll declare what languages I know, so I can understand Hindi, Marathi, and Punjabi. Preetu can understand. Preetu, you can understand Kannada as well?
Yeah, I can understand Kannada, Tamil, Telugu, Malayalam.
Okay, fine. So we have pretty much covered the. I can't understand Bengali, but I think most of the Bengali are comfortable in English or Hindi any which way. But don't worry. The reason I'm sharing with you is because your learning is more important than anything else. So if you have a question and if you want us to ask in any other language that question, please ask. We will address it both in your language as well as in English. All right, great. So friends, now let's look at the components. Let us start with gross salary. Gross salary, as I told you, is money that an employer has agreed to pay to its employee in exchange of its employment. That's gross salary. Now, how it is broken down into various components. So this gross salary now gets broken into various components. The first one is basic. Okay. Now, basic can be any fixed percentage of gross or any value that the employer has decided to put into basic. Okay. So basic can be, there are two ways organization work. Either they have a fixed amount that goes into basic, say 15,000 or 10,000 or 5,000 that goes into basic salary. Or many organizations keep it as a percentage of gross salary. Suppose gross salary is 50,000, they say 20% will go into basic, which is 10,000. So some organization work on as a percentage of basic. Again, I'm telling you, there is no law. Employer can decide how to break down the salary. Is basic clear? Now coming to
Yes,
DA.
sir.
DA is dearness allowance. Now, what is dearness allowance? So whenever we say basic and DA is combined together and is generally used as a common word called basic. So whenever someone says, what is your basic salary? It is understood that someone is asking, what is your basic plus DA? Okay. Now, DA as a component, which is called as dearness allowance. DA as a component, it will not be there in all organizations. It typically is in public sector or very traditional organization have this component called as DA. Now, what is dearness allowance? Dearness allowance is basically an amount that is kept for inflation, which is also called as Mehngai Bhatta in Hindi. Okay. Now, why this component is there in some organization? There are organizations, especially in public sector, where they cannot change salary every year. Their salaries are governed by some either pay commission or grants, where their salaries are not revised very regularly. Their salaries are revised every 3-4 year kind of a stuff, where there is a new pay commission launched or a new grants are coming in, or new wage boards announcements are happening. Now, in those organizations, but you still have to protect your employees for inflation because cost of goods or cost of living is going up every year. To protect for that, they have this component called as Dearness allowance, where, so say, for example, this year, the inflation has gone up by 5%, for example, which means the overall index of expense in this country has gone up by 5%. So that 5% amount they will put under Dearness allowance, saying that fine, your salary remains, so that net, your effective salary is same. Suppose I was earning 50,000 last year and I'm earning 50,000 this year. But technically my salary has gone down because cost of living has gone up, the cost of goods have gone up in the market, which means my savings are coming down now on the same lifestyle. To protect for that, they have something called as inflationary protection given through Dearness allowance. Is this clear, everyone? Suppose there is a overall, and there is a government index of inflation that gets released every year, that how much has inflation gone up in the country. Say, for example, last year it was some 2.2%. Is the overall inflationary hike, which organization buffered it. Many organizations, when they're doing their salary revisions every year, also consider what is the inflation, what is the inflationary hike that we should give to every employee. Say, for example, inflation in the country last year has gone up by 3%, which means someone who has not performed at all should also be given 3% because that is the expenses that has gone up at the country level. Okay. Now, some organization may use it, some organization may not, but Dearness as a component in salary, you will see only in public sector or very traditional organizations. Okay. In 99% of the organization that you would be working, there is nothing called as Dearness allowance. But if it is there, you should be aware what is Dearness allowance.
So then this DA is a variable component. It depends. It depends on the inflation. So how come
yes, it varies every 6 months or 1 year as decided by the employer. It does not vary every month. Okay, so let me give you another example. What happens in public sector? Suppose there is a public sector which is governed by pay commissions. Okay. Now, pay commission will do the salary revisions in 1 in 3 year, 1 in 4 year. But because the pay commission has not increased the salary, all the employees' salary every year will not go up. But the expenses are going up. Now, how do you protect for that expenses? The protection for that expenses is done through Dearness allowance without changing the overall salary structure. Is it clear? So it is not it is variable, but not varying every month. You know, some organization has DA adjustment done every 6 months. Some organization has DA adjustment done every 1 year, because it can come down also. It can have a negative impact also.
And I would like to add, some organizations do it on every 3 months also.
3 months also.
So
Some
there are few
organization
insurance sectors, yes, which does it for every 3 months.
Sir, sir, my question is that if DA, suppose I have 50,000 rupees of salary, I'm in public sector employee, and my DA is variable. So there should be a chance that my salary is also decreasing or increasing, na? Because it's a component.
Right, right. It does. You're right. It does. It increase and decrease your salary, and it increase and decrease to the effect of inflationary index.
Okay. Okay.
Okay. It is not your performance. It is purely the inflation index that is factored in here.
Okay. Okay.
You know, if the inflation has come down, which can happen on a quarter-on-quarter basis, it can actually reduce also.
So that is the reason actually I have seen that they are actually always say a band. Suppose 3,900 to 4,500. This size type of. Okay.
Very good. Yes, that exactly is the reason. You're right.
Okay.
And that is the reason even. Okay, fine. I think that much information is enough right now. Otherwise, it will get complicated. Okay. The next component, friends, but always remember the important point to note here is basic and DA is always read together. They're always seen together. So whenever people say my basic salary is 10,000, it is understood that they're saying my basic and DA is 10,000. Is it clear? It is always seen everywhere. It is written as basic plus DA. And if only basic is written, it is understood that DA is also included in this. The next component is, which you will see in most of the salary slips, is HRA, which is called as house rent allowance.
House rent allowances.
Now there are great benefits, tax benefits on house rent allowance. And it can be any percentage of the salary that employer can put. How much is the tax benefit on each of these components? We are going to study as we go along in this program, okay, in future sessions. Apart from that, there are other allowances. So there are a lot of allowances that a company can give: education, transport, food, uniform. There are a lot of allowances that company can put in the salary breakup. Now, friends, here important thing to note here is allowances are very different than perks. Many a times we confuse allowances with perks. Allowances is part of the salary, not additional benefits. It is within salary. Perks are outside salary, which are called as perquisites. Okay. Now, any benefit which is within salary is an allowance. Any benefit which is outside the salary is perk. Is the difference clear to everyone? What's the difference between allowance? Technical difference between allowance and perk? Yes. They all both are benefits. One is within the salary, other is outside the salary. Okay. And why allowances are kept? Because there are certain tax benefit on allowances as well. Is it clear? Now, allowances can be of two types. One is called as fixed nature allowance. Write it down. The allowances can be of two types. One is fixed nature allowance. Other is non-fixed nature allowance. Now, what is the difference between fixed nature allowance and non-fixed nature allowance? Any allowance that is given to everyone in the organization is called as fixed nature allowance. Now, the amount can vary. Someone may get 1,000 rupees, other person can get 2,000. But if an allowance is given to everyone in the organization, that will be called as fixed nature allowance. And any allowance that is not given to everyone, but to some people only in the organization, it is called as non-fixed nature allowance. Is it clear?
Yes.
So can you repeat that?
Yes, sir.
Yeah. I'm saying any allowance that is given to all employees in the organization is called as fixed nature allowance. And allowance that is given to some employees and not given to everyone is called as non-fixed nature allowance. Is it clear, friends? Now, amount can vary. There could be someone who is getting a fixed nature. Suppose uniform allowance. If uniform allowance they are giving to everyone in the organization, then it is a fixed nature allowance. If it is not given to everyone, then it is a non-fixed nature allowance.
So where does transport allowance come?
Again, transport allowance can come in both the places. It can come in. So it can come, first is, it can come in allowance, it can come in perks. Okay. Suppose you're giving a transport allowance over and above the salary, then it is a perk. But if you're giving within the salary, it is an allowance. Okay. If you're giving it to everyone in the company, it is a fixed nature allowance. If you're not giving to everyone, it is a non-fixed nature allowance. Okay. And what is the significance of fixed nature allowance that we are going to study a little later? Today only we are going to cover that. Is it okay, friends?
Okay. Yes, sir.
Now, whenever you do a breakdown of salary, say, for example, you have put some money in basic, some money in DA, some money in HRA, some money in other allowances. Now there is something called as special allowance. Now what is special allowance? Special allowance is basically a balancing number. What do you mean by balancing number? Any amount that is still left to cover up your gross salary will go into special allowance, which is nothing but miscellaneous or others. So some organization may call it others, some organization may call it miscellaneous, some organization may call it special allowance. The technically right word for it is special allowance, as defined by compliances. Okay. Now suppose, let me give you example. Suppose you have a promise to pay an employee say 50,000 rupees salary, and out of which you have put say 10,000 under basic. You have put say 5,000 under DA. You have put another 10,000 under HRA. And suppose you have put say 3,000 rupees under say uniform allowance. I'm just writing something. Suppose uniform allowance you have put 3,000. Now if you go through it, how much is the overall salary that you have promised? 50,000 per month. Now if you add whatever you have put in basic, DA, HRA and uniform allowance, how much it is coming to?
23,000.
Yeah, so this is coming to
33,000.
28,000, correct?
28,000, yeah.
28,000. But how much is the gross salary?
50.
50. So
50,000.
where will the balance money go?
22, yes.
Yeah, balance money, which is 50,000 minus 28,000, which is 22,000, will go under special allowance. It is nothing but a balancing number. It is nothing but a balancing number. Now, as per the Supreme Court ruling, which has come very recently last year, now they have said that even special allowance should be considered as a fixed nature allowance. Because it's a balancing number, you are giving it to everyone, it should be considered as a fixed nature allowance. Although it is called as a special allowance, but it is not any allowance. It is just a balancing number. But this has to be considered as a fixed nature, as defined by Supreme Court. Is it clear now? Now let me just pause and see if all of this is clear till here. Great.
Sir, I have a question here.
Yes,
Like,
please.
Here we see that special allowance is more than the basic pay. So is there any percentage?
Good question. This is a very good point. So, friend, what you have to always be aware, because your batch is a very unique batch which is going through the transition on laws. You would have all heard about the new labor codes. So what is happening in India? There are over 200 laws that governs human resources. Okay. Now, under the leadership of our Honorable Prime Minister Narendra Modi, when he took over the office in 2014, there was a great attempt being done to, in the spirit of ease of doing business for Indian corporates, there was a major drive to say how can we simplify all these laws and acts in the country, because they have been formed over the last 50 years, 50, 60 years from our independence. And some of them are relevant today, some of them are not relevant today, some needs modification. So they are trying to simplify all of this. And they're trying to put all these laws under 4 labor codes. They're calling it as labor codes, which I will also take you through very briefly in some time. Now you have to be aware, as per the new labor code, if there are any changes that is expected in compliances. Okay. Some of you, I will keep briefing you. So one of the questions that Vartika has asked is exactly that. Now, till now, there is no law, as we are talking right now, there is no law which says how much should be basic or DA or HRA or allowances. You know, everything can be special allowance also, no problem. Okay. Only law right now that exists is your basic plus DA should be over the minimum wages of the state. That's the only condition right now. It has to be more than Minimum Wages Act whatever the minimum wages defined as per Minimum Wages Act, which also we will study in the future sessions. Otherwise, there is no law. But in the new labor code, there is a change expected. Now, what they are saying is that basic plus DA has to be minimum 50% of the gross salary. It cannot be less than 50% of the gross salary, but that is not enforced, but that is proposed in the new labor code. Is it clear, friends? But as it comes, you will have to keep incorporating in your compliances, but right now there is no law. All it says it should be above minimum wages, but a standard market practice is anywhere between 30 to 50% is kept in basic. But again, it is just a practice, not a law. Is it clear, friends?
Yes, sir.
Great. Any other question before we move ahead? Super. So wherever you have questions, keep asking. So we will get into now the first discussion that we want to have today. So let me just take you through the labor codes. So there are 4 labor codes that are going to come in this country. At this, you can read it later on also. Which
Rahul,
is code...
sorry to interrupt. I just
Yes.
had a question on the previous thing that we just discussed.
Yes,
So I
please.
work in an IT company as an HR generalist. So when this new labor code, like it came into picture, like, it has like they have proposed that they'll keep it 50% of the gross compensation. So what we did was we made it 35% as a standard practice, so that in case it's changing to 50%, it won't be difficult for all the employees just to accept that, it has suddenly increased and the in-home salary has decreased. So we made it 35% in the month of December. So just as a concern, the director of this company had raised queries like, his in-home has decreased a lot, because being director, his salary was around 80 lakhs per annum, which is very high. So if we are making 35% of the total gross compensation as a basic, so it was a big discussion that went on. It's a small company, so we interact with each other. So, but when you said that we can keep it in between 30 to 50%, so that is absolutely normal, right? It's not something that we did wrong. Like we can.
Most of the organization keep it between 30 to 50 as a practice.
Okay, so like as far as I have seen, it's not around more than 30%. Like maybe I have not seen all the pay slips or anything, all the structures.
Yeah, so there are organizations which are keeping it very low,
right.
And there is a reason for it which we will study today.
Okay.
And for high wage earner, it won't impact anything. The impact only will be at a low wage earner. So your director will have no consequences of putting more money under basic. Okay, but it is more for the benefit of low wage earner that government is pushing that it should be 50%, and we will study that today, that why it is relevant. For directors, I don't know what was the topic of debate, but putting 35% under basic will have no consequences.
Okay, all right.
Will have no consequences. So yeah,
okay, cool.
The debate
Like
could be emotional in nature, but financial consequences is nothing.
Okay, cool. Thank you for that. So one more concern. So basically, yes. We had the special allowance in our pay structure, like special allowance was the term that we were using. Yes. But it was changed to bucket benefit, and it was suggested to us by our chartered accountant. But he was not able to explain why it was changed from special allowance to bucket benefit. Like if special allowance is the balancing amount, then it's absolutely fine once again to put special allowance, right? Like, is there a difference between bucket benefit and the special allowance?
No. See, I'll tell you, there is a bit of confusion which I'll clarify today. So it again has no financial consequences. You can name it whatever. Okay. Now, some chartered accountant has started recommending, and I will come at the stay with your question. At the relevant point, I will explain what has happened is because in the Supreme Court ruling, they've used this word called special allowance. And they say, please, it should be considered as a fixed nature allowance. And hence some chartered accountants, okay, fine, change the name.
Okay.
From special allowance to someone else. But there is no financial consequences because there is another law which protects you on that, which I'll talk to them.
Okay.
Okay.
Right.
And again, it is targeted to low wage earner. In IT, you will have hardly any low wage earners. Right. Most of them are well paid. So it has no consequences.
Okay. All right. Thank you.
So there is a code on wages, there is code on social security, there is industrial relation code, and there is occupational safety, health, and work compensation code or working condition code that is coming into force. They're all drafted, released, and enforcement is happening one by one. The whole idea is how can we combine all these acts into simple 4 codes. Okay. Now today, friends, we are going to start with our first compliance, which is PF. And before we do that, as we are going to be together for 3 hours every session, and focusing on the screen for 3 hours sometimes can be challenging. So we generally give 1 or 2 breaks in between. Okay, and this is for the new participants. We generally give about 7 to 8 minute or 10-minute break in between, 2 breaks in between, so that you also are able to relax and come back fresh for the discussion. Yeah? So we will get into our first break. We will take a 7-minute break now. And within 7 minutes, we come back. And to make it easier for you, I will put the timer on the screen so that we all know when to be back. All right, welcome back, everyone. Okay, so friends, now we will get into our first important compliance from a HR point of view, which is PF. What comes to your mind when you talk about PF?
Provident fund जो हर महीना कटता है.
Very good. Provident fund जो हर महीने कटता है.
Sir, Provident fund is the amount that is deducted from one's salary for their future, to meet their future needs. Like after they retire, they need something to depend upon so that they can meet their needs. So they from every salary, a certain sum of amount is being deducted. I think it's 12%.
Very good. Anyone else?
Savings for
There's a contribution of both contribution of employer and employee.
Very good. Contribution of employer and employee. Why this is required? Why government have to do all this?
It is a kind of pension, like which is there for the future for the private.
So, friends, it's very
post-retirement plans.
Yeah, but why government have to create this? Everyone can take care of their post-retirement, right? Why have to force this?
To provide the sense of security to its employees.
Provide the sense of security. Very good. So, friends,
tax benefits.
Yes. Sorry.
Social responsibility.
Social responsibility. Now, friends, what you will realize is most of these acts that you are going to study from a compliances point of view are very old, are very, very old. They were created around independence. Within first 4 or 5 years of Indian independence, most of these acts were formed. Now, when India became independent in 1947, what kind of economy were we running? So there was a very interesting, when India completed 50 years of independence, there was a chat show by BBC, which is called as Hard Talk, in which our then Prime Minister I.K. Gujral was addressing. And he made a very interesting statement. He said, when India got independence, we actually started with zero economy. And he said, when I'm saying zero economy, I am not overstating. We actually started this country with zero. Okay. And at that time, most of the workforce in India was uneducated, unskilled, and most of the businesses were very fragmented, small scale, unorganized kind of a structure India was having. Okay. And when you have to lead a country or you have to run a country where most of the people are poor, uneducated, kind of laborers, unskilled, hand-to-mouth situation. Most of the businesses cannot support much because they all themselves are small, very fragmented. Now, one of the big risks that the country faced with this is exploitation. And most of these acts were there to protect the exploitation, both for employee and employer. because this workforce, people who have hardly any money, hand-to-mouth situation, they will retire one day, they will fall sick one day, they will have to get married, they will have families, they will deliver babies, there are a lot of things that will come, which are called as life events. Now, government was in no position at that time to support these life events. Government cannot support old age, government cannot support pensions, government cannot support, for people at large, government cannot support their medical facilities. For all of this, government had to come up with policies and acts where people's interest is protected, because and all these acts you will see were made from that lens. And I would say the policy makers and lawmakers at that time, in my personal opinion, were far ahead in their thinking process than the politicians right now. Because how is it possible the acts which were created 70 years back are holding true today as well? Which means look at the foresight with which those acts were formed. Yes, these acts have modified over the period of time, but many of these acts that you will see were actually formed, way back 60, 70 years back and still holds today. Yeah. PF is one such act, which is called as Employee Provident Fund, and Miscellaneous Provisions Act. So this act is called as Employee Provident Fund and Miscellaneous Provision Act of 1952. Now, what was the objective of this act? PF is kind of a future saving, which is equally contributed by both employer and employee, and in which employee also gets certain tax benefits. So what's the objective of PF? It is a forced future saving initiative in which the money is equally contributed by both employees as well as employers, and the employee also enjoys certain tax benefits as part of PF. Clear? And how much is a contribution by both the parties?
12.5.
12% of basic pay.
12%.
12%.
Yeah, you're
12%.
You all are close. We'll look at that. Okay. Before that, let's look at applicability. So PF is applicable across the country, including the state of Jammu and Kashmir. Now, in many of these acts, you will find these terms written separately. The reason being, when these acts were originally written, Jammu and Kashmir was not part of political India. It was included later, and hence these acts were amended to include. And many of these acts were anyway excluded even after their inclusion, even after the state's inclusion into the country under the Article 370 and after abolition of that article. Please take care of your mics, everyone. After the abolition of Article 370, most of these acts are also now applicable in the state of Jammu and Kashmir. Whenever you will see any act, every act has its own definition of wages. Every act, in the act, they have defined how will the wages be calculated for that employee. And hence, in every act, you will have to remember how the wages is to be calculated. Now, if we are discussing PF, we will have something called as PF wages. If we are discussing ESI, there will be something called as ESI wages, HRA wages, leave encashment wages. So every act will have its own definition of wages, which could be a little different from each other, and we have to remember that. Today, we are going to study first how PF wages is calculated. We are not calculating PF right now, friends. We are only calculating PF wages. Okay. As per PF Act, how the PF wages is calculated. To calculate PF wages, the first thing that we have to see is whether basic plus DA is less than 15,000 or more than 15,000. In the employee salary breakup, whether PF, whether basic plus DA, basic plus DA is less than 15,000 or it is more than or equal to 15,000. So two things that you will have to check, whether it is less than 15,000 or it is equal to or more than 15,000. Okay. Now, in case it is less than 15,000, then PF wages will be calculated as basic plus DA or basic plus all fixed nature allowances. If your company is having DA, then even DA is a fixed nature allowance. So it is basic plus all fixed nature allowances is to be added to basic salary to calculate PF wages. Is it clear to everyone how PF wages to be calculated in case basic plus DA is less than 15,000? But if in case basic plus DA is more than or equal to 15,000, then PF wages will be equal to basic plus DA. That's it. Let me just pause and see if it is clear to everyone how PF wages is to be calculated, and it will be written as PFW. I'll just write as PF wages right now so that you're more clear. Is it clear, friends? PF wages calculation. PF wages, if it is less than basic plus first thing that you will check is basic plus DA, whether it is less than 15,000 or more than or equal to 15,000. If it is less, PF wages is equal to basic plus all fixed nature allowances, and if it is more than or equal to, it is only basic plus DA that will be considered as PF wages, right?
Sir, can you share one example like suppose basic?
I'm coming to example.
Okay, okay.
Is the concept clear? Then I'll look at the
Yeah.
What I'll do is, even for convenience, I keep generally putting it onto our WhatsApp group so that whenever you're practicing, you also have these reference sheets in front of you. Okay. Now let's look at a couple of examples so that it will make it more clear to you. Now, first, we will practice both the things right now. First, we will practice salary breakup as well as PF wage calculation. Now, let's look at this case. Suppose there is an employee whose salary is 40,000 rupees. Okay. Salary is 40,000 rupees. And suppose food coupons I am giving at a, I'm giving food coupon of 1,500 rupees to this employee. And this is a FNA. I'm giving food coupons to everyone. Now let us do a salary breakup. I want you to calculate. Now, condition I'm giving is, and this is just an example. It is not that every organization has to follow this. Basic salary, I am saying we will keep at 30% of the gross salary. How much will that be? 12,000. Just write down. And in next class onwards, if you want, you can get your Excel sheets or calculators, keep it with you, because in payroll, you'll always need it. It's always better if you have an Excel sheet in front of you. It's easier to work with that. All right. So so 12,000 is basic. Now, dearness allowance. Dearness allowance, I'm saying is we will keep at 50% of basic.
6,000. 6,000.
6,000. HRA, HRA, I'm saying X percentage of basic, which is 40. 40% of basic is what I'm keeping HRA at.
3,000.
4,800.
4,800.
4,800 is HRA. And I have told you the food coupon I'm giving at 1,500 rupees to everyone. So how much will be the special allowance?
$15,700.
Sorry?
15,700.
15,700. So how do we calculate it, friends? So we have these breakup done of all components, which is 12,000 plus 6,000 plus 4,800 plus 1,500. And our gross salary we know is 40,000. So from gross salary, if we remove all these components, we get the
Special allowance.
balancing number, which happens to be 15,700. Is it clear to everyone? If someone is not clear how this breakup is done, please ask, raise hand, because this is very important, because at a fundamental level, it's very important to understand the numbers.
So the basic, the percentage of basic will vary according to the organization, right?
Yes, everything will vary according to organization. This is just an illustration I've given.
So it's not mandatory to follow certain percentage.
No, it's not mandatory to follow certain percentage. Employer can choose the percentages basis. They can also have a fixed value. So it is purely employer's choice.
Okay.
So the special allowances is always the deduction of the basic DA and HR and food coupon.
Yes, not deduction.
Mhm.
It is a balancing number to reach to the gross salary.
Okay,
So don't, because deduction is very different word. Deduction is I'm deducting from your salary. I'm not deducting. I'm only doing the salary breakup. Okay. So it is the breakup of the salary, because your overall salary is 40,000. So you have to reach to the 40,000 value, and hence whatever is left, we keep it under special allowance. Deduction as a word is I am deducting. So I'm not deducting anything. I'm just doing the breakup. Is it clear, friends? Any other question? Anyone who has not understood this? Okay, super.
And so
Now,
the basic and DA and HR are always variable to the company, no?
That's right. That's right. All components will vary from company to company.
It is not fixed any like.
No, nothing is fixed.
30% of the gross salary.
No. Every company can decide its own rules.
Oh, fine.
Now let's calculate PF wages for this employee. What will the PF wages for this employee?
18,000.
What is the formula for PF wages? How do we calculate PF wages?
Basic plus
Basic
DA
plus
is more
DA.
than
Basic
50.
plus
So
DA.
first we check what is basic plus DA. So what is the basic plus DA in this case?
18,000.
18,000. It is more than 15,000 or less than 15,000?
More than.
It is more than 15,000. So what will be the PF wages?
18,000.
Basic
Very
plus
good.
DA.
So the PF wages will remain at 18,000 because it is more than 15,000 anyways. Is it clear? If
Yes,
it would have been less than 18,000, then what we would have done? We would have added food coupons to it and special allowance to it.
15,700.
Yes, plus 1,500 plus 15,700 food coupon and special allowance we would have added to this so that we get the PF wages. Clear? Let's look at one more example. Let's look at a salary breakup of this employee. And in this case, the food coupon allowance that I'm giving is 3,000 rupees. How much will be basic, friends?
9,000.
9,000, which is 30% of gross, which is 9,000.
DA is 4,500.
4,500.
DA is 4,500. Very good, which is 50% of basic.
And
HRA?
1,800.
HRA is
1,800.
How?
3,600. Yes.
3,600.
40%.
40% of basic.
Yeah.
40% of basic. And I've told you 3,000 at food coupon. So for how much will be the special allowance?
Sure.
9,900.
9,900. Very good. Is everyone getting these figures? Anyone having any confusion? Please let me know. How we got this? We know the overall salary is 30,000. This breakup is coming to 20,100. So the 99,900 is left. Will go under special allowance. Now let us calculate PF wages for this employee.
13,500.
13,500.
30,000 plus 3,000 plus 9,900.
It is there.
26,000.
26,400 will be the DA.
DA.
Not
Sorry, the PF.
PF wages. PF wages.
PF or PF wages?
PF
PF
wages.
wages.
Correct. So as a compliance point of view, don't mix the words. So you're right, it is PF wages. So basic plus DA first we will calculate and check whether it is less than or more than 15,000. So this comes out to be
13,500.
13,500, which is less than 15,000. So we will have to add all fixed nature allowances to this. What are the other fixed nature allowances? Food coupon,
8,000 and 9,900.
and special allowance. So that will also get added to this value so that we are able to calculate PF wages, which happens to be how much?
26,400.
26,000. 26,000.
400.
Clear, everyone? Now let me just stop here and see if it is clear to everyone. Anyone who's not clear, just raise hand. Or if you're still doing it, just raise hand so that I know you're still doing it.
Sir, so
why
PF and
didn't we
PF
add-
wages are not same.
Sorry?
Why didn't we add the HRA while we were calculating the PF wages?
Okay, I'm sorry. I'm sorry. I forgot to explain you earlier. So the definition is, if it is less than 15,000, then all allowances, all fixed nature allowances to be added except HRA. If you go back, just give me a second. So it is except HRA. HRA will not get added, although it is a fixed nature allowance.
Can you
HRA will not.
repeat it? Can you repeat, please, sir?
Yes, I'm repeating it. So every fixed nature allowance will get added except HRA. Although HRA is also a fixed nature allowance, but the definition of PF wages very clearly states that if it is less than 15,000, please add all fixed nature allowances except HRA.
Okay, sir. Thank you.
HRA. So if I just go back a slide, and which I've also posted onto the WhatsApp group.
Sir, why HRA is not added?
That's a law. So many times you will have a, because there are other adjustments that are done on HRA. So the way Act defines PF wages is if the basic plus DA is less than 15,000, then basic plus all fixed nature allowances except HRA to be added.
The 15,000 is like as per the law, or it
Yeah, it is as per
differs?
the law.
Okay.
It is as per the law.
Okay.
Law very clearly defined less than 15,000 or equal to or more than 15,000. So
So it does not differ with the organization?
No, that is a law.
Okay.
So how to calculate PF wages is a law. What employer can decide is the salary breakup. But once the salary breakup is decided, then PF wages, there is a proper formula of calculating. Clear, everyone?
Sir, You said that HRA is as per law, we don't calculate if the PF is less than 15,000. Sir,
One
why?
second, one second, please. 1 second. Just give me a second.
इसके पास हेडफोन होंगे, ले लो। हैं? लाती होती है ना एयरपैड्स।
Yeah, sorry for the interruption.
Sir,
Okay. Yeah.
what I was saying is that HRA, you said as per law, we don't add in PF if it is less than 15,000. So why only HRA? It's a fixed allowance, fixed wage.
Because it is
fixed,
defined in the law.
So why only HRA has been taken in law?
Yeah, that's what
There
it's
are
defined in
other
the
fixed fees also.
See, it's defined in the law. See, because many a times what will happen is, so what we are not getting into that why law has been designed that way. Okay, because we
Yeah.
are more discussing that how do we be compliant to the law. Because why the law is discussed like that, then we have to study law. Okay, say for example, if I murder someone, then the imprisonment is up to 4 years or 4 years. Now, why 4 years? Why not 5 years? Is how it is defined in the law. We're not debating that. We're debating if this is the situation, what is the consequence? Okay, that is how. So if we are like police. Whenever you go to police say we are law enforcing agency. So don't ask us a question why the law was made. We are here to enforce the law. Okay, if you jump the signal, I will stop you. No, why I should stop you and fine you? Because law says it. Now, why law is designed that way? Don't ask me. Ask the lawmaker. Okay, but many a times I will give you the explanation that okay, fine. So broadly speaking, because it will also distract a little bit, we will take it towards the end. If you really want to know why the law is made this way, why HR is not included. Right now, just remember, if you're calculating PF wages, we have to take all FNAs except HRA in cases where basic plus DA is less than
15,000. Got it.
Okay. Is it clear till here? PF wages is clear to everyone?
Yes, sir.
Let's look at two more cases. Although the breakup is given here, I just want you to calculate the PF wages for case number 3 and case number 4. Salary breakup I've already given. Just put in the chat box once you get case number 3 PF wages and case number 4 PF wages. Just write case 3 this much, case 4 this much. So Saurav is saying case 3 is getting 70. And case Archana is saying case 4 25,900. That's the right answer. Just see if anyone is not getting these numbers, which is 17,000 and 25,900. Just raise your hand. I will address it. I will give you the clarification. Yes, Kundali.
Yes, sir, I did not get it.
Which part you have not got it? Only what have you not understood? Please complete. What have you not getting? Where are you getting stuck?
So I have a little confusion in how to find out the special allowance balance.
Okay, so what is your understanding how to find out special allowance? Did you leave the meeting for some time by any chance when this was getting discussed, special allowance?
Yes, sir, actually the network got disturbed.
So it will be very difficult because then I'm holding 40 people because what you have missed out. Because don't worry about how special allowance is calculated. Just focus on if you're able to calculate PF wages properly. Special allowance, stay back with me at the end of the class. I'll address.
Okay, sir. Okay, thank you.
Just see whether currently you're able to calculate PF wages.
Sir, the basic is of 50,000 is like we will calculate to the 30% and it will come 15,000.
No, so that was another example. Here I've already given you the breakup.
Okay.
How the employer has put the salary breakup for this employee.
Okay.
I just want you to calculate PF wages.
Okay. Okay.
Because it is not necessary that you have to follow only those percentages. You can follow whatever percentage employer wants. If, for example, in case number 3, employer has said DA will be 0, no DA. So there could be a situation then in the salary breakup, no DA is mentioned. Then you will assume that the DA is 0. Okay?
Okay, thank you, sir.
All right. So if there is any question, just raise hand. Otherwise, I'm moving ahead. So in case number 3, we will calculate basic plus DA, which is more than 15,000. So we keep this PF wages as 17,000 only. Okay. But in case number 4, basic plus DA is 13,000. So we will have to add FNA, which is uniform allowance of 1,500, which is given as FNA, and special allowance of 11,400, which makes it a total of 25,900. Shweta, just check your 21,900. 21,900 is the wrong answer. It should be 20.
Yes.
Yeah. Okay. Great. So let's move ahead, friends.
Sir, so this is just PF wage, not PF.
No, this is not PF. This is PF wages. Okay.
And sir, how it impacts in our salary?
I'll come to that.
Okay.
Because it will get answered in next 10 minutes. Because PF is calculated from PF wages.
Okay.
Okay. And we will go. Now, important rule here, friends, is there is a special provision which is called as ceiling limit. Okay. And I want everyone's attention here. It's an important point I'm discussing. So there is something called as a ceiling limit. Now, if PF is more than 15,000, then employer has a choice to put ceiling limit to PF wages, which means employer can change PF wages to 15,000. Listen to this carefully again. If PF wages, let me just take a whiteboard and write it down so that it's much more clear to all of you. There is a special provision of something called as ceiling limit. It is also called as statutory limit, which says if PF wages is more than 15,000, in that case, employer has a choice to change the or to reduce the PF wages up to 15,000. Suppose PF wages is 21,000. So employer can reduce this value of 21,000. And up till how much employer can reduce? It can reduce up to 15,000. It cannot come below 15,000. 15,000 is the
benchmark.
It is a ceiling below which you cannot come if the PF is more than 15,000. If PF is less than 15,000, so anyway, there is no question, then that will remain as PF wages. This ceiling is only applicable in the cases where PF wages is more than 15,000. Employer can reduce it to 15,000 or any value between the actual PF wages and 15,000.
Okay. So if employee wants, employee can increase.
No. Employee has no say in this. Only employer can change this. It's a purely employer's decision. So this is a ceiling limit. It is a power to employer. Employer to decide, not employer.
Hello.
Yes, please.
Yeah, it is only fixed. It neither gets reduced nor gets increased. It's only 15,000, right?
Say that again.
Yeah, it's only 15,000. They can't increase it or lower it, right?
No. Okay. Say for example, let's take one example. Suppose the PF wages is coming out to 21,000. Suppose PF wages is 21,000. So the employer can change this value, saying I'm not keeping PF wages for this employee at 21,000. I am reducing it. It can reduce by whatever value the employer wants, provided it should not drop below 15,000. So it can keep it at 20,000,
Okay.
19,000, 18,000, 17,000, any value it can keep, but it cannot drop below 15,000. The lowest it can go to is 15,000. It cannot drop below 15,000 once it is changed. Is it clear?
Sir, in any organization, is the ceiling limit is for every employee or it varies from employee to employee?
Good question. Very good question. So it can vary from employee to employee. So employer may choose to apply ceiling limit on Neha and may choose not to apply to Amrita. So same employer can give different treatment to different employees because this is a power given to employer to change the ceiling limit or apply the ceiling limit on PF wages.
But is it according to the law that it's 15,000
Yes, it is by law.
or it varies as you said?
It is by law. It is, so this ceiling limit is by law. It is also called a statutory limit. It is by law. And this is optional. It is not mandatory that you have to reduce. It is not mandatory. It is optional. Whether employer want, they can exercise this power. Is it clear, friends? So, because we are learning PF wages, so with this, your understanding of PF wages is complete. Now we will get into PF.
I'm going to reduce from 21,000 to 15,000, so that differentiate amount will be shown in the special allowance, right?
No. Okay, very good question. So the employer is only changing the PF wages and not changing the salary structure. So when employer is changing this 21,000 to 15,000, it is only changing the PF wages. It is not disturbing the salary structure. It can remain the salary structure. Say, for example, someone was saying the director's basic is 35,000 or whatever. So it can remain at that, but ceiling can still be applied without changing basic, DA, other stuff. So that salary structure can remain as it is. Say, for example, in the cases that we were solving, and you can just take the screenshot of this if you want. I will also put it onto the group. In this case, say for example, case number 3, PF wages was 17,000. Now, without disturbing the salary breakup, employer can say, okay, fine, for this case number 3, I will be using PF wages at 15,000 and not at 17,000. Because that is the power available to the employer. Clear, friends? And the salary structure can remain as it is. Manoj, is it clear to you? Digvij, is it clear to you?
I have one question.
Yes, please.
So as you were telling that we can reduce, I mean, employer can reduce some amount and not less than 15K. But I mean, why this reduction, or is it something? I mean, why? What is the benefit for the employer to have this power to do so, or why?
It will get okay, so it will get answered in 15-20 minutes. Just stay with your question. Okay, just stay with your question. It will get answered in some time.
Sure.
Yes, Amrita.
Sir, I have one more question.
Yes, go ahead.
Sir, like in the organization, we have a different salary breakup for the different employees. So once we imply a ceiling limit, it will applicable for all the employees?
I just answered that. You can apply to some and you may not apply to some.
Okay.
It is employer's choice.
Okay.
So the basically the basic pay will be the 17,000. That it's the employee's power that he will only
not employees, employers.
Yeah, employers power that is only taking that 15,000.
Right. Absolutely
There's
right.
no changes in the salary structure.
There is no change in the salary structure. Absolutely right.
Okay.
And that is the reason this provision is there. Otherwise, you will have to change salary structures. Yes, Amrita, your question, please.
Sir, one question is that, sir, this PF that we are saying, PF is not falling under salary, because the gross salary is divided into basic, DA, HRA, FNA, special allowance. So
Amrita,
PF
your
is
voice
not calculated based on this. Hello, my
Yeah.
voice is clear?
It's breaking in between. Go ahead.
So PF is not falling under gross salary, because gross salary is, like division has been shown over here. So PF is only calculated based on all this gross salary.
So we have not calculated
the
PF yet.
demarcations.
Wait, we have not calculated PF yet.
The PF wages stands like PF wages, be it 15,000, where will it stand? It is fixed in the fixed part or in the variable part?
No, it is not. We are studying PF right now. Salary breakup, we are not studying right now. We are studying PF. To calculate PF, we have to first calculate PF wages. Okay, so don't mix it that whether it is part of fixed salary or not. Your fixed salary is 50,000 in case number 3. You have done the salary breakup. The salary breakup is done. There is
Yes.
no more salary breakup that is to be done right now. Now, from this salary, we are trying to calculate PF contribution. To calculate PF contribution, we have to first calculate PF wages. That is what we have completed. We will calculate PF contribution now.
Okay.
Okay, we'll come to that. It will get addressed. Just stay with your question. Yes, Digvijay.
सर सुनिए ना, मुझे पूछना था, ये जो सैलरी स्ट्रक्चर में एचआरए का जो स्ट्रक्चर रहेगा, अमाउंट रहेगा, वो अगर वो नहीं चेंज हो सकता ना?
हो सकता है, अगर एम्प्लॉयर चाहे तो चेंज कर सकता है, कोई प्रॉब्लम नहीं है।
ओके ओके ओके।
एम्प्लॉयर चाहे तो जो ये एम्प्लॉयर ही डिसाइड करता है, एम्प्लॉयर चाहे तो चेंज कर सकता है। यू नो द क्वेश्चन दिग्विजय इज आस्किंग फ्रेंड्स इज कि कैन एम्प्लॉयर चेंज द एचआरए? एम्प्लॉयर चेंज कर सकता है एचआरए।
ओके,
पूरा स्ट्रक्चर एम्प्लॉयर ही डिसाइड करता है।
ओके सर, ओके।
Amrita, you have another question, or it is okay? Now let's look at. So Archana is putting on the chat a very interesting point, saying case 3 PF is 17K, so we can reduce to 15K. Does it apply to case 4 where PF wages is 25,900? Can this also be reduced to 15,000? Yes. If your PF wages is more than 15,000, then the employer can reduce it. Archana, is it clear? Very good question. Because once PF wages is arrived, so how to arrive PF wages is first we have studied. Once PF wages is arrived, can the employer apply ceiling? It can apply, provided it is more than 15,000. So in case 3 and case 4, both are more than 15,000, so employer can apply.
Sir, I think so. If ceiling is 15K, the minimum ceiling employer should take, no, just to reduce the PF amount.
Yeah, so we'll come to that. We have not studied PF yet, so we'll come to that. Just stay with your question.
So there is no maximum like amount, right, for the basic.
Maximum is PF wages, no?
Yes, sir. If the PF wages is 50,000.
Yeah.
We can take the 15,000.
Yeah, there is no upper limit of PF wages. Anything can be PF wages. Whatever is basic plus DA can be PF wages. There's no upper limit. Clear? Okay. So friends, before we get into the PF calculation, let us look at, there are 3 kinds of organization from PF applicability point of view. Okay. A normal organization, the rule is if you have 20 or more employees, you need to comply to PF Act. If any organization having 20 or more employees, PF Act has to be implemented. Okay. Less than 20 employees, you may exclude. If you are a cooperative society, then 50 or more employees. Now, government from time to time also release some gadget where there is a list of sick organizations or a special support organization. There, it can also start at 10 or more employees. Okay, but how to define the sick organization? This government decides. It is not that if you're not making profit, you're a sick organization. No. Or it is not that if you have less than 10 employees, you're a sick organization. No. It is the other way around. If you are a sick organization, then the PF will be applicable on 10 or more employees. Employee strength. Clear? So normal condition 20, cooperative society 50, sick organization 10. Now, friends, important thing to note here is that PF Act is a non-reversible act. Now, what do I mean? And I need your attention here, friends. What do you mean by non-reversible? Which means once a PF Act is applied to any organization, it can never be reversed. Say, for example, today your organization has crossed 20, you are 25 employees now. So will PF Act be applicable to the organization? Yes, organization will have to register the organization under EPFO, which is called as Employee Provident Fund Organization. Yeah. Once you have registered under EPFO, you will have to comply to PF Act till the time the organization exists. Although you have 0 employees, you still have to be compliant to PF laws. Because once on any organization PF Act become applicable, it is applicable forever. You cannot say now we have only 18 employees, so we will not comply to PF Act. No. If you have crossed 20 and the PF Act is applicable, it is applicable forever. Clear, friends? Next one is government. Both state and central government has special power to apply PF Act on any organization irrespective of its employee strength. So above 20, it is mandatory for you to register your organization under EPFO. But if you are less than 20, state government or central government can still enforce PF Act on your organization. And why is that? We will study in the next session when we are studying ESI. Okay? That why government has been given the special power to apply PF Act or enforce PF Act on any organization irrespective of employee strength. Okay. If your organization is having less than 20 employees and the organization want to register themselves under EPFO, can we do it? Any organization can do it, provided the current law is provided majority of the employee agree to be part of PF. Suppose your organization is having 15 employees only. So by law, your organization is not under EPFO. Okay, may not be registered under EPFO. But you want that we want to enforce PF in our company and we want to give this benefit. So you can enroll your company under EPFO, provided more than 50% of the employee has given a consent that yes, we have no problem in getting into PF. Is it clear? Now, but again, the rule applies once registered, you can never deregister it. You cannot say no, now 50% employees are not agreeing, so we will remove it. No, once enforced forever. This also is changing in the new wage codes. In the new labor code, the consent of employee is getting removed, which means it is purely with the employer's discretion whether, and only in the condition of less than 20, because more than 20 anyone has to comply. If less than 20 employees, employer want to register under EPFO, employer can register, employee consent is not required anymore. But the law which is proposed, the law currently states employer has to agree, number one, and number two, more than 50% employees have to agree. Clear, friends? Is it okay till here?
Yes, sir.
Great. Now we will get into how do we calculate PF. Let's take few seconds pause because this will need all of your attention. Okay. So friends, we have calculated PF wages till now. Okay. Now from PF wages, now we will calculate various elements of PF. Now, before we get into how do we calculate PF, it is important for you to understand what are the 4 important accounts under PF. The first account is called as EPF account number 1. The first account is called as EPF account number 1. Now, what is the EPF account number 1 is the main account under which majority of the money of the employee is kept. Now, EPF account number 1 and EPS account number 10. So I'll come to, so EPF account number 1 is just like a bank account. It is just like a bank account. And it is called as EPF account number 1, which is Employee Provident Fund account number 1. The second account is called as EPS account number 10. Some part of the contribution of PF is deposited in EPS account number 10, which is called as Employee Pension Scheme account number 10. EPS account number 10 stands for Employee Pension Scheme account number 10. Now, friends, when in 1995, there was a big regulation that was passed, because before that, pension was only applicable to public sector and government sector employees. Okay. There was a big debate that how can we also have pension for private sector employees. And with that, the scheme came out called as Employee Pension Scheme, which said that whatever is the money that is kept in PF account number 1, some part of that money we should deposit in another account which will be called as EPS account number 10. Now the money kept in account number 1 and account number 10, both are in the name of employee. Both these accounts are opened in the name of employee, which is the PF account holder. Okay. Money that is there in account number 1, it can be withdrawn as a lump sum amount at the time of retirement. Whatever money is there in account number 1, employee can withdraw this money at the time of retirement. Okay. Now, amount which is there in EPS account number 10, amount which is there in EPS account number 10 can also be withdrawn at the time of retirement, provided this account is held for less than 10 years. If this account is held for less than 10 years, which means age of this account is less than 10 years, then this money can also be withdrawn at the time of retirement, like EPF account number 1. Okay. However, if this is held for more than 10 years, if EPS account is held for more than 10 years, then the money that is kept in EPS account number 10 can only be used by PF department to pay pension to the employee after retirement. The amount that is there can only be used to pay pension for the employee. Is it clear till here, friends?
Yes.
And both account number 1 and account number 10 is in whose name?
Employee.
It is in the name of the employee, who is the PF account holder. Okay. Now there are 2 more accounts, which is EPS account number 2. Sorry, EPF admin account number 2. Now EPF admin account number 2 is held by EPF department, EPFO. And this is to take care of the administrative charges for maintaining the PF accounts in the country. Entire PF in this country is managed by a body called as EPFO, which is Employee Provident Fund Organization. To take care of the administrative expenses of that organization, there is an account called as EPF admin account number 2. And some money has to be deposited in this account also every month, which we'll talk about it after this. Okay. And then the 4th account is called as EDLI account number 21, which is Employee Deposit Linked Insurance. Meet, please stay muted. Employee Deposit Linked Insurance, account number 21. Now, money which is there in this account is used to give insurance to the employees, is used to give insurance to the PF account holder. Now the first two accounts, which is EPF account number 1 and EPS account number 10, belongs to employee. These are in the name of employee. Whereas EPF admin account and EDLI account is in the name of
EPFO.
EPFO. Very good. Employee Provident Fund Organization. They are in the name of EPFO. Now, is it clear till here, friends? Before we get into calculations.
So can you repeat the EPF admin?
Sorry.
Can you repeat the EPF admin account number 2?
Okay. So EPF admin account number 2 is to take care of the administrative expenses of EPFO. So to run that organization, they need money, and money come from a contribution that is taken under EPF admin account number 2, which we are going to study. So amount which is kept in this is to further taking care of the administrative expenses of EPF.
Okay.
Sir, which is the account EPS account number 10. If this account is kept for less than 10 years, then the employee can also withdraw their money in lump sum.
That's right.
Okay, thank you.
Benazir Khan, your question, please.
Sir, like these two accounts, employee hold days, like EPF account number 1, so both functioning the same, like.
No, objective of these two accounts are different, Benazir. The objective of EPF account number 1 is to give you lump sum, to give a PF account holder lump sum money at the time of retirement. So EPF account number 1, let me complete. EPF account number 1, the objective is to provide lump sum cash at the time of retirement. And EPS account number 10, objective is to give pension after retirement. The objective of these two accounts is different. Yes, please. Is it clear?
But sir, actually network was gone, so.
Sorry.
Am I audible, sir?
Yes.
Sir, actually network was not there. So the both accounts, the function with like object will be the same.
No, I just explained. The objective of account number 1 is to provide lump sum cash benefit at the time of retirement. And objective of EPS account number 10 is to provide pension after retirement.
Excuse me, sir.
Hmm?
Yes, sir. If we are withdrawing some amount before our retirement from PF account, then we can withdraw it from EPF and EPS as well.
No, only EPF account number 1.
Okay.
Is it clear? Everyone okay till now? Let's move
Yes,
ahead.
sir.
Yes, sir.
Okay. Now let's see how the money goes and how much money goes in each of these accounts. Okay. Now, whatever is the PF wages, now we will start point of the calculation is PF wages, because there are a lot of questions that were coming in the chat. That what is the significance of PF wages? The significance of PF wages is to do the calculations now. So once we have calculated PF wages, the first thing is employee contributes 12% of PF wages. Employee contributes 12% of PF wages from its salary, and that amount is deducted from the salary and deposited in EPF account number 1. So employee contributes 12% of PF wages from its salary, and this money is deposited in EPF account number 1. Okay. Who will deposit it?
Organization.
Yes. Employer. Employer will deduct from the salary and deposit it in EPF account number 1. Because in these accounts, which is EPF account number 1 and all these accounts, the only depositor can be employer. Only employer can deposit money in these accounts. Okay. So employer has a responsibility to deduct 12% from employee salary and deposit it in EPF account number 1. Likewise, employer also contributes 12% of PF wages. And where will this money go?
EPF account number.
This amount is divided into 2 parts. This 12% of PF wages, which is an employer contribution, it is called as employer contribution of 12%, is divided in 2 parts. First part will go into EPS account number 10. How much money will go into EPS account number 10? The formula for that will be 8.33% of PF wages or rupees 1250, whichever is less. How much money will go? 8.33% of PF wages or rupees 1250, whichever is less, will go into EPS account number 10. Once this money is deposited in EPS account number 10, now we are left with how much? Total amount that employer has to contribute is 12%. Now we know how much we have deposited in EPS account number 10. Now the balance money will be deposited in EPF account number 1. So how will you calculate? First, you will calculate 12% of PF wages, which is an employer contribution. Then you will divide it into 2 parts. The first part is EPS account number 10. And the second part is EPF account number 1. So whatever has gone into EPS account number 10, reduce that, and the balance amount employer will contribute to EPF account number 1. Let me just pause here and see if it is clear, because this can be a little complicated for some of you.
The remaining 3.67% will be deposited to EPF account number 1.
Not necessarily 3.67. Not necessary, because because it could be a possibility that 1250 was a lesser amount. So you have deposited that. So which means it can be more than 3.67 also. Yeah, Benazir, your question, please.
Sir, like this 8.33 will be fixed all the time, right?
Sorry?
The 8.33% of PF wages is always fixed, or
it is fixed. So the formula is fixed. Okay. You first calculate 12% of employer contribution, and out of those 12%, first check 8.33 or 1250, which is a lesser value. Whatever is a lesser value, go into EPS account number 10. And whatever is left will go to
account number 1.
Right.
And sir, one more question. That the EPS account number 10, if it is less than 10 years, then we will withdraw the lump sum amount.
You can. Employee can.
Okay.
That option is available with employee.
10 years, then we will not withdraw the amount.
Yes, then only you can get pension.
Okay.
From that money.
Okay.
Clear? Now, once this is done, employer is also expected to pay EPF admin charges at a rate of 0.5% of PF wages. Employer has to contribute, and this money is deposited in EPF admin account number 2. Employer also have to contribute 0.5% or rupees 75 whichever is less into EDL towards EDLI account number 21. Please read this as or, not and. Is it clear, friends? So 12% employee will contribute. So how much employee is going to contribute? Let's do a quick revision. How much employee is going to contribute?
12%.
12% of
PF wages.
PF wages. And where this money will go?
EPF account number 1.
And then what we will do? We will calculate employer contribution. How much employer is going to contribute?
12%.
12%. And this money will be divided into two parts.
Two parts.
EPS account number 10 and EPF account number 1.
1.
Where will you put money first? EPS or EPF?
EPF.
First EPS and then EPF. Okay. Then employer also contribute 0.5% of PF wages towards admin charges and 0.5% or rupees 75, whichever is less, towards EDLI charges. Is it clear?
Yes, sir.
And then we'll look at examples. Calculate this. Let me just put it onto the chat. All right.
Sir?
Yes, please.
So can you explain again EDLI account number 20?
Yeah. EDLI is 0.5% of PF wages or rupees 75, whichever is less, will go to EDLI account number 21.
So what is the full form of EDLI? I just missed it.
Employee deposit linked insurance. Objective is to take care of insurance for employees who are a part of PF.
Okay, sir.
All right, superb. So are you ready for some practice?
Yes, sir.
So we'll get into practice. Before that, we take a short break so that we come back fresh. And also, today's session, friends, may get extended to about 5:30 or 5:40. So you may please plan accordingly. If you have scheduled something for 5, you may just reschedule it. Today's session, because we have spent an initial time in understanding other stuff, so may get extended to 5:30 or 5:40. Yeah. All right. So we take. Okay. So friends, what we are now going to do is, this is a salary breakup of an employee. Now what we are going to calculate, each of those elements, that how much money as an employer you will deposit in each of the accounts and where will this money come from. Okay, the other two things that we have to address in this case. So this first one I will do along with you so that you get a hang of it. And the next one, I will encourage you to do it on your own. Now this, I'm going to go a little slow, friends. If in case at any stage you are not understanding, because I will make it in a manner that you are able to do it along with me. But if you are left behind or if you have not understood the calculation, immediately raise hand. There is a raise hand button on your screen. Immediately raise hand so that I know that you have a question and I will stop. Because it's important for you to understand the next 15-20 minutes very well. So let's look at this case. There is an employee breakup given to us and we have to calculate each of these elements. So first thing that we will calculate is PF wages, because once we have PF wages, then only we can calculate the contributions. So in order to calculate PF wages, first we will see how much is basic plus DA. That is how we start. So here basic plus DA is how much?
13.
13,500.
13,500.
500.
So which means we will have to adjust for
Add
PF
more.
wages. So PF wages will be, we will have to add, and here we will assume food coupon is also fixed nature allowance given to everyone. So we will add food coupon because we have to add all fixed nature allowances except HRA.
HRA.
So we will have to add 1,500 plus 11,400 to basic plus DA. And that amount will come out to be
26,400.
This will be 9,000 plus 4,000 plus 1,500 plus 11,400, which will be
4,500.
sorry.
The DA is 4,500.
4,500. Yeah. So the total amount will come to
26,400.
26,400. Everyone getting this number?
Yes, sir.
This becomes PF wages. Anyone who has not understood how to calculate PF wages 26,400, just raise hand immediately. I'll wait for a few seconds and then I move ahead. All right. So, oh, sorry. So once we have calculated PF wages, so PF wages will become basis for all our future calculations on PF. Okay. So we have PF wages at 26,400. Now, first is the amount that has to go into EPF account number 1. Where will this money come from? This money will come from employee salary, correct? So employee will contribute. How much employee will contribute? Employee will give 12% of PF wages.
3168.
Which will be equal to
316.
12% of 26,400, which is
3168.
3168. Is everyone got this? So 3168 is the value that will go into
EPF account number 1.
EPF account number 1. And from whose account this will come from? This will come from employee's salary 3168. So employer will deduct 3168 from employee salary and deposit it in EPF account number 1. Right? Now, okay, first let me just pause and see, is everyone clear till here on this calculation? Yes, Archana.
So here we are not using the ceiling limit. So we are not reducing the PF wages up to 15,000. We are using
Yes,
to 26,400.
yeah. So for practice, we are using 26,400. But employer has a choice whether they want to use ceiling or they don't want to use ceiling. In this case, we are assuming that the ceiling is not applied.
Okay, thank you.
Okay, now we go to the next point, which is now the employer contribution. So how much employer is supposed to contribute?
12%.
Employer will contribute 12% of PF wages. And that comes to how much?
3168.
3168. Now this 3168 will get broken into
two parts.
Two parts. Very good. This will get broken into two parts. The first part will go to EPS account number 10. How much will go to account 10?
8.33%.
8.33% or 1250, whichever is
less.
So let us calculate. How much is 8.33% of PF wages?
2,190.
Sorry. 2,000.
199.
Calculate 2,1.
99. 2199.
2199.
Then 1250 will.
26,400 into 8.33%. 2,199. Okay, so this will be 2,199 or rupees 1,250, whichever is
low.
low. So which one is low?
1250.
1250.
1250 is low.
Low.
Yeah. So this one is low. So this will go to EPS account number
10.
This will go to EPS account number 10, which is 1,250. So how much is left now? How much total contribution employer has to make?
3168.
Out of which the employer has contributed 1,250 to EPS account 10. So how much is left now?
1918.
So the balance, which is 3168, 3168 minus 1,250
1918.
is equal to
1918.
That will go to EPF account number 1. So this will be 1918. So which means employer is contributing 3168 like employee, but this money is broken into two parts. First, it has gone to EPS account 10 and the balance has gone to
EPF account number 1.
Let me just pause and see if this is clear, because this is where the maximum confusion will be. I want everyone to be absolutely clear on this.
The amount that is 1918 is from the employer contribution, right?
That is right. So employer has to pay total of 1368, of which 1250 employer has given to EPS account 10. How 1250 came? 1250 came by calculation of 8.33% of PF wages or rupees 1250. One of the error that many participants may make here is they may calculate 8.33% of 3168. Don't calculate 8.33 of 3168. Calculate 8.33 of PF wages. Okay. Or 1250, whichever is less. So here 1250 was a lesser amount. So that has gone to EPS account number 10 and the balance has gone to EPF account number 1.
So in total 3168 plus 1918 will go for EPF number 1.
Me just take care of your mic. It is getting unmuted very often. If you have a question, then only you can ask. Yeah.
So the 3168 and 1918 will be the total amount will go for the EPF account number 1.
Yes, good point. So in EPF account number 1, the total employee will have at the end of the month, the total amount in the bank account of EPF account number 1 of employee will be 3168 plus 1918. You're absolutely right. So that is the money that will be going to EPF account number 1, combining both employee contribution and employer contribution. Clear? Now, employer also will contribute towards admin charges at 0.5% of PF wages. How much will that be?
132.
132.
132.
Yeah. And employer will also contribute 0.5%
Or 75 rupees.
of PF wages or rupees 75.
Whichever is low.
Whichever is low. So how much will come to 132 or 75?
75.
Whichever is low. So which one is low?
75.
75.
75. Very good. So this is the contribution that will go to each of the accounts when you are depositing it with EPFO. Okay. Now, how much is the total contribution made by employee?
Employee
3168.
3168. Where is this money coming from?
Basics variable DA.
No, where is this money coming from?
From his
Basic
From employee salary. Very good. This
Yeah.
money is coming from employee salary and going into EPF account number 1 through employer. And how much employer is contributing in this case?
3168 plus 130.
Total 3,375.
Sorry? Total?
3375.
3375. Which is 3168, which is going to EPF and EPS, 132 to admin, and 75 to EDLI. So total employer is paying 3375, employee is paying 3168 in this case. So when you are depositing the money to EPFO, the total money that the employer will be depositing is 3375 plus 3168, out of which 3168 will recover from employee salary, and 3375 employer will pay from where? From company's revenues.
Cost to the company.
Yeah, from company's revenue, and this money will go into cost to company.
So will this be shown in the CTC like all
Yes, this will be
the,
shown in CTC. Absolutely.
the contribution of the employer will also be shown in the CTC.
That is right. On gross salary, employer can add this 3375 to calculate CTC. Is it clear now?
Sir.
Now there was a question that why employer should use ceiling point. Now here is the answer. Now this, if you look at this sheet, if this employer would have used the ceiling point and optional ceiling limit available of 15,000, the employer has an opportunity to reduce the PF wages to 15,000, thereby reducing the contribution that the employer has to make. Is it clear? Someone was asking that why employer should use a ceiling option. This is the reason employer may use a ceiling option if you want to contribute lesser from its own pocket. And even employees take home will go up because the employee contribution will also come down. Is it clear now?
Yes, sir.
Let me just put this onto your WhatsApp group so that you can refer to it later on once you're practicing it in case. Any questions? Shall we do one more case?
Yes, sir.
Okay, let's look at this case. I'm sorry, in the previous case, there is an image which is overwriting the calculations. No problem. Okay, so let us look at this calculation. First, we will calculate PF wages. So first we'll calculate basic plus DA.
18,000.
Basic plus DA in this case is
18,000.
18,000.
18,000, which is more than 15,000. So PF wages will be
18,000.
18,000. Right? Now on this PF wages, we'll start our calculation. First, we will take the employee contribution. Employee contribution will be 12%
2160.
of PF wages, which is 2160. So the employee is contributing 2160. Now employer contribution. Employer will contribute how much? Employer will also contribute 2160. But this will be broken into two parts. The first part will go to EPS account number 10. How much will go to EPS account number 10? Let us calculate.
1499.
It will be
1449.
8.33%.
1449.
1499.
1499.
1250, no?
Calculate again. 8.33% of 18,000.
It is 1499.
1499. 1499.
And so whichever will be less. So
1499.
yes, sir.
Is this the number?
Yes, sir.
Yes.
1499 or
1250.
1250.
1250, whichever is less. So which one is less in this case?
1250.
1250 is less. So 1250 will go into EPS account number 10.
10.
And the balance will go to
Account number 1.
account number 1,
910.
9.
which is
910.
910.
910. How is this 910 coming? 910 is basically
2160 minus
2160 minus
1250. So the total amount that will go in EPF account number 1 is 2160 plus 910. Correct? And the total amount that will go in EPS account number 10 is 1250. Then the employer also contributes 0.5% of PF wages to admin account, which is
90.
90. And employer also contributes
0.5%.
0.5% of PF wages or
75 rupees.
Or
rupees 75.
Rupees 75, whichever is
Low.
less.
Yes. Which one is less here?
75.
75.
75 is less. So 75 will go. So what is the total contribution by employee? 2160 is total contribution.
2160 plus 90.
And by
plus
employer?
2325.
2325.
By employer is 2160 plus 90 plus 75.
Plus 70.
Is it clear, friends, now? Is it getting clearer to you now?
Yes. Yes, sir.
Okay, great. So what I'll do is, so let me just pause here and let everyone complete so that I know that we are up to speed. Anyone is stuck, not understanding, just raise hand, let me know. In the first session, it can happen, so don't worry. Please let me know if you're stuck at any point. I'll wait for a few seconds.
So the employee.
Sorry?
So the employer contribution is 2160. So it will be calculated by 12% of PF wages, no?
Right.
So how we will calculate it 2160 multiplied by 12%.
Why? 2160 multiplied by 12%? What is PF wages in this case? 12% of 18,000. 12% of 18,000, na? 12% of PF wages.
Okay. Actually, some network connection issue is there, so I didn't get it.
No problem. Are you okay now?
Yes, sir.
Sir, so total employee contribution will be 2,325, right?
Employer contribution.
Employer contribution.
That's right. Okay, so I will also, friends, give you some questions as homework. Okay, so I will give you some questions which you can practice and update it onto the group. Everyone need not to update. Once 3-4 people have updated, I will respond whether it is correct or not, and everyone else can follow it. Okay. Now, let us look at few more elements of PF. Just give me a second, friends. Okay. Now, whenever you apply ceiling, there could be a issue with some of your employees, because what can happen is, although take home goes up, at the same time employer's cost comes down, but there could be a section of employees who may feel that I want more savings. So by using a ceiling limit, you are also restricting my savings. I could have saved more if my PF wages would have been more. I'm okay to contribute more, but why are you applying ceiling? Although technically it cannot be challenged because it's an employer's choice. It is a power given to employer to use the ceiling limit. However, there are certain provisions which are there, or certain products which are there, which you can educate your employees if they come with this objection, and if your employer is using a ceiling, that they can apply or they can make use of. EPF we have already studied. Now there is something called as VPF, which is called as Voluntary Provident Fund. Now what happens in Voluntary Provident Fund, every employee has a choice where employer has a choice to reduce the PF wages, employee has a choice to increase PF wages, and call it as a Voluntary Provident Fund without changing the PF wages that is designed by the employer. Let me give you one example. Suppose the actual PF wages is 21,000. Okay. Now employer is saying I am changing it to 15,000. Okay. And my contribution will be restricted to that, and that is how I will calculate. Now employee can sign up for something called as Voluntary Provident Fund. Say I want more savings, so I am okay to increase this limit now. So I want to, instead of PF wages of 15,000, I am okay to increase it to higher value. So the way it is done is, PF wages is 15,000, out of which employee will contribute 12% and employer will also contribute 12%. So here employee may say that I am increasing this percentage, my own contribution of 12%, I am increasing it to say 30% or 40% or 50%. So that the more money is deducted from my salary and going into the EPF account for my retirement savings. Okay. So employee has a right to increase this value from 12% to a higher percentage. And this higher percentage will be considered as VPF, which is Voluntary Provident Fund. Okay. Now, which means implication of this is, when the employer is deducting it from the salary, instead of 12%, employer will deduct more from as an employee contribution. Instead of 12%, it may say 20% or 30%, whatever the employee has declared. Okay. And where will this money be deposited?
Account number 1.
Account number 1. Yes, absolutely. So instead of 12%, employer will deduct more amount from the employee side, which is a higher amount, which the employee has said. And anyway, employee contribution goes into account number 1. It will continue to go into account number 1. There are one condition on EPF, VPF. The condition is that once an employee signs a VPF, it cannot exit before 1 year. If the employee said that please deduct 30% instead of 12%, I am willing to contribute more, it cannot be backed out before 1 year. Is it clear?
Yes, sir.
Great. Then there is something else which is called as public provident fund, which is nothing to do with EPFO, but any citizen of this country, whether it is salaried or non-salaried, can open a PPF account. And in PPF account, even kids can open a PPF account. The maximum contribution that can go into PPF account is 1,50,000 every year. Minimum is 500, maximum is 1,50,000. But the biggest advantage of a PPF account is entire interest that is earned on PPF account is tax-free. There is no taxes on the interest earned on PPF account. So you can suggest this also to your employees, that if you want more saving, you can go for PPF. And HR has nothing to do with PPF. You can, employee can go to any of the bank and open a PPF account. Is it clear? So these are additional 2 instruments that you can suggest to your employees. Now, PF account number, after 2014, it is now called as UAN. What used to happen earlier, whenever you used to join any company or any employee joining any employer, a new PF account was created. And there was a big issue in transferring money from one PF account to another PF account. Sometimes it used to take years to transfer money from one PF account to another PF account. Now, under ease of doing business, PF department came up with this concept of universal account number, which says when bank account can be one for the entire life, why PF account number cannot be one for entire life? So they came up with this something called as universal account number, which is called as UAN now. When you, irrespective of the employer any employee is working, they can, when they join, they give the bank account number to deposit salary. They can also give a UN number for PF contributions. So that for entire life, there is one UN number with every citizen of this country. Whichever employer the person is going, the same UN number can continue. So there is no need of transferring money from one account to another account. Okay. So it's a unique 12-digit number given to anyone, and anyone can go into EPFO site, open a UN number, or open a UN account, and once the KYC is done through Aadhaar, the employee can give it to the employer for processing of their PF henceforth. And the same account number can continue for the rest of the life. Okay. So some of the homework that I will give you, it will also have a mention whether ceiling is to be applied or not to be applied in the calculation. So take care of that while calculation.
Sir, I have a question.
Yes, please go ahead.
If we will be applying the ceiling limit to this employer contribution, so then we will be calculating this EPS and even also.
Can't hear you. Your voice is breaking.
That ceiling limit amount. If we will be applying ceiling limit to the employer contribution. Hello, am I audible?
Yep. Go ahead.
Just a minute. Hello, am I audible, sir?
Yes.
Just a minute.
Yes, you are audible now, Shiva.
Yeah, I'm saying that if we are applying this ceiling limit to employer contribution, then this will be applicable to this EPF admin and EDLI contribution calculation also.
Yes, so because you have changed the PF wages itself, no? So everywhere it will change.
Okay. And employee contribution will be on that particular wages only. Like if it's more than
Everyone's
1 lakh only.
contribution will be on that percent, on that value.
Employee contribution will be that which we have stripped to employer one.
Are
For
you
example, if the this PF wages was 18,000 and employer has shifted it to 15,000, like applying single limit, then we will be calculating employee contribution also on 15,000 or only on this employer one.
Both employee and employer.
Okay.
Everything will be on 15,000.
All right.
So PF contribution, employer has a responsibility to deposit it with the EPFO within 15 days of salary dispersal date. Whenever is your salary dispersal date, within 15 days, this money has to be deposited with EPFO. And how to deposit this, how to do the filing, we are going to discuss in our last session. Once we have studied the entire payroll calculations, then we will look at how do you do the filing. Both PF and ESI filing, we will see it in the last session. But if in case there is a delay in payment, there is 12% per annum interest penalty and late payment penalty under section 14B. This is the extent of delay. How much is the delay? This has to be paid by employer if in case the employer is making a delayed payment to EPF.
The delayed penalty will be only on the employer, right?
Yeah, because employer has a responsibility to deposit, no?
Oh.
Because only employer can deposit the money.
Yeah.
And if they're deposited by delayed, then there is a penalty.
So when ceiling limit is changed by the employer, the rest of the thing will be the same?
Yes, the rest of the things will remain. Only the ceiling value will change. And what do you mean by rest of the things?
Like HRA and special allowances.
So
and
salary
uniform
structure will not change. Salary structure will remain same. Only the PF wages value will
Yeah,
change.
that will be calculated according to the ceiling limit.
That's right.
Okay.
That's right. Okay. So now, friends, we come to the last part of our discussion for today, which is international workers. You could be dealing with international worker scenario. If you are not, it's okay. But if in case your organization is also dealing with international worker, then the PF rule slightly changes. Okay. Now let us understand the rules for them. First, let us understand what is the definition of an international worker. Who is defined as an international worker as per PF department? Any foreign national working with a company which is registered under EPFO in India will be considered as an international worker. Suppose we are Protouch, we are registered under EPFO in India, and suppose I hire an Australian national in Protouch, then that person will be considered as an international worker because the person is an international, that person is a foreign national working in a company which is registered under EPFO in India. Okay. Secondly, any Indian national working with a company which is registered under EPFO in India, but this person is based in a foreign country for work, then this person will also be called as international worker. So there are two situations that can happen for international worker. One is a foreign national working with a company which is registered under EPFO, or an Indian national working outside the country, but for a company which is registered under EPFO. Clear?
No, sir. Can you repeat, sir?
Which part? Everything?
That second part. Second part.
Second part. So any Indian national, suppose Saurav, you are working with Protouch as an employee, and Protouch is part of EPFO in India, and you are based in Australia for work.
Okay.
Okay, you are on a work visa to Australia. In that case, you will be considered as an international worker.
Okay. So my PF will be calculated as per Indian.
So I'll come to that how PF will be calculated. Okay. Now, is the definition of international worker clear?
Sir.
Yeah. Now let us look at a definition called as global income. Now, for international worker, PF wages is equal to global income. Now, what is global income? Global income is all the money that a person is receiving irrespective of the country the person is working in is called as global income. Suppose, Saurabh, you are an international worker. A part of your money, salary is paid in India. A part of your salary is paid in Australia. But whatever your money that you are drawing from the company, all put together, irrespective of the country that you are paid in or the currencies you are paid in, will all be combined together to calculate your global income, and your global income becomes your PF wages. Is it clear? Global income is clear, and PF wages for international worker is clear. Now, no ceiling can be applied to an international worker. So employer cannot apply a ceiling to an international worker. Okay, which means the PF has to be calculated on the global income, which has to be a very big amount. Now there is one more complication with with international workers. Whichever country you are going to work, that country may also apply certain social security obligations. Suppose Saurabh is posted in Australia. When Australia is giving the work visa to Saurabh, they may also apply certain compliances like PF in that country. Saying that if you're working here and any income that you draw here, we will also apply, say, social security obligations. And vice versa. Suppose there's an Australian national working with us, while taking the work visa, Australia may apply certain obligations in that country. To avoid that, because this is kind of dual social security obligations for an employee. In order to avoid that, there is something called as SSA, which is Social Security Agreement.
पापा जी भी क्लास चल रही है मेरी, मैं आपसे थोड़ी देर में बात करती हूँ.
Anidhi, please stay muted. So Social Security Agreement is done between the countries. So currently, India is having Social Security Agreement with 17 countries, which are mentioned at the bottom. Now, if you are a part of SSA, then Social Security obligation will not be applied by both the countries. It will be applied only by the origin of the nationality. So, for example, if Saurabh is there in Australia, then Australia, while giving the work permit, will not apply any Social Security obligations on him. Saurabh will have to comply to Social Security laws only of India. But similarly, if there is a foreign national, suppose Australian national with us, in that case, Australia is the home country. So only Australia will apply all the Social Security obligation. That person will not pay anything in PF in India. Okay. So whenever India do any SSA with any other countries, which means only the home country of nationality will apply the Social Security obligations. The other country will not apply. Now, what is the logic of this? The logic of this, friends, is that when someone works in another country, it is assumed that the person, once the work is over, or once the job is over, or when the employment is over, person will return back to the home country because he has not taken a citizenship of the foreign country. He has only taken the work visa. And once the work is over, the person will go back. And since PF is a retirement benefit, and that's the reason foreign country does not apply the PF, because the person has no intention to retire in that country. The person will retire in the home country. And that's the reason, as per the SSC agreement, only one country will apply the social security obligations, not the other country. Now, this is only very few employees will undergo this, because it's a big impact, both on employer and employee. It's a huge impact because of the global income. That is the reason all the large companies, what they are doing is, they don't hire them as employees. Either they hire them as consultants or on a contract. And if they still want to hire them as employee, they open another registered office in that country and make that person as employee of that country rather than showing it as an international worker. So these are 2-3 ways in which organization manage this, because if you go by this law, the impact on employee and employer is very high in terms of commitment. Let me just pause and take questions if you have anything on this.
Sir, I couldn't understand the global income part.
Okay, so global income is simple. Anything that you are earning, anything that is being given to you as cash, let it be in form of salary, perks, benefit, whether in home country or in foreign country, everything will be considered as a global income. Global income is all income that an employee is generating, irrespective in the country that the person is being paid in. Because many a times what can happen, company may show that we are giving only this much salary in India, but rest of the salary is paying in Australia. So all the incomes will get combined for this employee to calculate a global income. Is it clear?
Yes, sir.
Like just now you have told about the international worker is like a person, a foreign person who works here, or an Indian person who works over there. Is an international worker. But right now, during the pandemic, because of the pandemic, it has become work from home.
Right.
So would they still be implied like as international workers?
No, it won't be. See, okay, it will only is implied if someone is on the work permit in another country.
Okay.
And is working in another country on a work permit or work visa, depending on the country. Some country call it a work permit, some countries call it as work visa. Okay. If someone is going there and staying there for work, and it is not on a business visa, it's on a working visa, which means the person will be working there.
Okay. Okay.
So in that case, this will get applied.
Yeah. So if we are working from home, but for a foreign company, we are not considered international workers.
No, if you are working for a foreign company,
I mean, like
anyway, it will not get applied now, because this law is only applicable to the companies that are registered under EPFO in India. Because this is a PF discussion we are doing. If you are working in a foreign country, a foreign company, say for example, you are working with Johnson & Johnson America, okay, and you are their employee. Johnson & Johnson America is not under EPFO in India. So anyway, PF, you are free from PF on that front.
Okay, got it.
It is only for people who are, it's only for organizers. Now I'm talking to you as a HR. If you are as a HR of a company which is under EPFO in India and you have to deal with international workers, how will you deal? Yes, Benazir?
So as you said earlier, the foreign citizen who works with under EFO company, like if it is a citizen of foreign country, then how he will use the PF thing?
Yeah, but he is employed. Okay, so let's take an example. Suppose there is an Australian national. We have employed that person. Protouch has employed that person. Okay, and now this person is an employee of Protouch. Now it does not matter whether the person is based in Australia, person is based in India, or person is based in America or anywhere else. Now this person is my employee. If this person is my employee, I have to follow PF rules because I am registered under EPFO in India as a company.
Okay,
Every
so we have
employee
to
of
give
mine
them.
will come under EPF regulations.
Okay, got it.
Okay. Now,
Yeah.
what can happen is now because India is having SSA agreement with Australia,
Mhm.
I can use that benefit saying all the social security obligations this person will pay only in Australia, nothing in India.
Okay, so this comes in global.
Because for that person, Australia is the home country, not India.
So that thing comes in global income, no?
No. Why are you getting confused with global? Global income is the income that this person is generating. Okay. Now, from global income, in which country the person will pay obligation, Australia or India? So if for this person, it will be Australia.
Okay.
But if there is no SSA agreement, then this person has to pay obligation in both the countries, Australia as well as India.
Oh.
Is it clear?
Yes.
Any other questions from anyone? Anything that is not answered? Yeah.
You said that to avoid this, the employers take employees in contract basis, or they set up an office in the other country and take employees from there. So in that way, the employee is still our employee, right? And not.
So it is an employee for, see, because what happens is any organization is an independent entity. So if I have registered, say, for example, Protouch Australia Limited, okay, I have registered an independent company in Australia and hired an employee there, okay. So that company is nothing to do with EPFO in India, no? That is an independent company operating from there. Is it clear? And that's the reason all large companies will have an independent registration in many countries. Yes, sir.
Sir, the example that you gave of Australia citizen working in India,
right.
So as per social security agreement, we will not pay the PF, no, from here. They will be paid PF in home country.
That's right. That's right.
So means the amount he is earning over here, that will whole amount will be his takeaway.
No, I'm not. So it is the person is not excluded from taxes. This is social security obligation. Person is excluded from PF.
Okay, for PF only, no amount will be deducted, right?
No amount will be deducted. Yes.
Okay, that means whatever he is earning, deducting the taxes, that will be his, and from home country, whatever amount he is earning over here, as per that amount only in home country, he will be getting the PF.
That's right. Absolutely.
Okay. Thank
Whatever are the rules of that country.
Okay.
All right then. So it is 5:30, friends. This today's session got a little extended, but in PF classes the session sometimes may get extended because of calculation. Thank you very much. You have a great week ahead. For all the new joinees, if you want to stay back for certain discussion, anything that is not clear to you about the program, can stay for another 5-10 minutes to address your question. And all those who have no questions can, if they want to carry on, you can. And, me and Preetu will see you next Saturday at 6 p.m.
Sir, one more question.
Yes, please. One second. So let me just say goodbye to people who don't have question and they want to carry on. People who have question can stay back. I will address their questions. All right. Bye-bye, everyone. Take care.
Thank you. Bye.
Thank you. Bye-bye. Bye-bye. Yes, Saurabh.
Sir, today there was an exam, no? But I was not able to give the exam. So when next can I give the exam?
You will be notified on the WhatsApp group only. Whenever there is an exam, the message comes to in the group along with the form. You can just fill the form.
Okay, sir.
I have a question.
One second. Let me just address Saurabh's question.
Sir, means today the message I received at 10:50. At that time I was not able to see. I was outside. I was driving. So it would be means it's my request that can you inform a bit earlier, like in the previous day, that tomorrow you have exams or something.
It was informed to you on Wednesday. Okay, have you done your SHRM module? Sorry.
Yeah, I have done. I yesterday also I called my.
No, 1 second. Are you on the WhatsApp group?
Yeah, I am on the WhatsApp group. That in that the message was written that those who have come.
You read the message. Go to the message. Read the message on Wednesday, which I've sent.
I got one message today at 10:52.
No. You read the message that I've sent on Wednesday on the group. You have the WhatsApp group in front of you?
SHRM module, na? Exam notice.
No, you have section A. You are on the section A group.
Yeah.
Can you scroll up and go to my message on Wednesday regarding exam notice, SHRM module?
Okay. Oh, that I got it wrong. Means the message I read, but
No
I got
problem.
it wrong.
Every module, when it starts, there is a schedule published in which the date and time of the exam is mentioned. So once the SHRM module started, you got a schedule in which it was very clearly written when is the SHRM exam, date and time both were mentioned. The reminder is sent to you on Wednesday saying that Sunday 11 a.m. will be the exam. So that's the second reminder. And then only the exam started today. So there were two times the communication happened on this.
Okay, then I only got it.
No problem,
wrong.
it can happen. So just be active on the group. No problem. Whenever the next SHRM exam will happen, you will be notified on the same WhatsApp group.
Okay, sir. Thank you.
And in that case, you can fill the form and write the exam.
Okay, sir.
Okay, no problem. Thank you. Yes.
I have the question.
1 second, Shalini. I'll just raise your hand so that I know the sequence in which people are asking questions.
Right.
Yes, Anisha.
So it's about the penalty part.
Yes.
Under PF, when after 15 days, if you don't pay the PF in 15 days, so 15 days from when? From the payday according to the
From the date of dispersal of salary.
according
Salary
to
dispersal date.
Yeah, like that is on the company basis, or is it does PFO has some other?
No, there is a separate law which says that all the employees which are there on a monthly salaries, you have to pay the salary before 7th of the subsequent month. Okay, so there is a separate law when you have to pay the salary, but whenever you are paying the salary within 15 days, because when you pay the salary, that is the time you actually deduct from the employee. Okay, so that within 15 days you have to deposit it with EPF. All right then, thank you very much everyone. Bye bye. Take care. Thanks, Ritu.
Thanks, Rahul. Bye.